All right, folks, it is FOMC day. We've got about 13 minutes until Jay Powell goes live. The answer for if we got a rate cut or not, if you are wondering and you didn't know yet, is no. We did not get a rate cut. The markets were pricing in a 1% chance of a rate cut. We did not end up getting a rate cut. The Federal Reserve has kept rates unchanged. Shouldn't be that big of a surprise to pretty much anyone who's been keeping up with the markets over the past couple of weeks. May probabilities are at about 18%. Today's probabilities were at 1%. We did not get that rate cut. However, what Jay Powell says today is going to be very important because it will determine if we're getting closer to that rate cut or not. Now, we did get a new summary of economic projections and a dot plot, which is what really matters. And the summary of economic projections says right here, it's pretty much unchanged from the past one we saw. There are some minute differences, but in general, the Fed is expecting 50 basis points of cuts. So it could be one 50 basis point cut or two cuts of 25 for 2025 and 50 basis points again for 2026. So that would be four cuts of 25 bips over the next 2 years, 100 bips of cuts. The market is more so pricing in, when you look at the Fed futures probabilities, 75 this year. The market is not pricing in 50. So there is a disconnect between the market and what the Fed is saying. I think the trajectory of the market today, at least in the short term, is going to be determined on if the market feels that Jay Powell is saying 50 on the summary of economic projections, but realistically is probably getting closer to 75. And that's where they're going to have to read between the lines between what he says and what he means when it comes to rates. Now, markets are up. Still, Robinhood almost at 43, up 6.5%. You got Oklo, that's up 6% on the day. NVDA touching 119, that's up 3%. The S&P 500 almost up 1%. Palantir's up 3.4%. Tessie is up 4.2%. Affirm's up 7%. PayPal's up. SoFi's up. Hims is up. I mean, the Qs are up 1%. It's a really green day across the broader markets. I think there should be a little bit of skepticism here, because if Jay Powell says anything that gets the market to think that 50 basis points is more likely than 75, or 50 basis points is just going to take way too long, meaning it's not going to be May, it's not going to be June, it's not going to be August, it's going to be September, then yeah, we could see a little bit of weakness in the short term. This could just be algos playing get out. Where is Meta right now? Meta was at 578. Meta's at 581. So Meta trying to go green. Most of the Max 7, I think, is flat or green. Yeah, Meta's the only one that's red. It's barely red, but Microsoft's up 1%, Google's up 2%, Amazon up 0.5%, NVIDIA up 3%, Tesla up 4%. Tesla's having the best day out of all of them, and then Apple is up 1% here right now. What was positive? Why are we up right now? So honestly, nothing that the Fed said was relatively positive. I mean, the Fed didn't really speak yet in terms of Jay Powell. They put out the sort of stuff we expected them to put out with in terms of the dot plot and the summary of economic projections, but they haven't said anything yet that I think would get the markets to be super excited. So I think a lot of this right now is, quite frankly, algorithmic, and we're either going to see a continued pump when Jay Powell starts talking, or we will see a little bit more of a dump, which has happened actually the last 3 times. Now, again, here's a summary of what the Fed said. They're expecting 50 basis points in 2025, 2026. PCE inflation raised to 2.7% versus 2.5%, and GDP growth outlook was cut to 1.7%. from 2.1%. Technically, that's not a bad thing, because if that reduces inflation, when we get a 40 basis point reduction in GDP, then that could get hopefully a 50 to 100 basis point reduction in headline CPI. But that is how the Fed is thinking of it right now. In terms of QT, I think we got an update on this. This might actually be the reason why the markets like it. So beginning in April, the Fed will slow the pace of the balance sheet runoff. Fed Governor Waller supported no change on interest rates, but dissented to balance sheet changes. Okay, so out of all the Fed governors, Waller seems like he dissented to slowing down the pace of QT, which is bullish, if I'm not wrong. That is a good thing. But in April, it looks like we're going to be, to an extent, quantitative easing, even if it's not literally quantitative easing, because we are slowing down the pace of quantitative tightening. Maybe that's why markets are pseudo pumping right now. Maybe that's what they like to see. It's funny that Waller objected to that. That's interesting. Waller has been pretty damn dovish. That's actually, I didn't expect. I thought Bowman would react negatively towards slowing down the paces of cuts, or slowing down the paces of balance sheet runoffs. But apparently it was Waller. This was what changed in their statement from last time. So they said uncertainty around the economic outlook has increased, and the committee is attentive to the risks to both sides of its dual mandate. They also said beginning in April, the committee will slow the pace of decline of its security holdings by reducing the monthly redemption cap on Treasury securities from $25 billion to $5 billion. So there's your QT stuff. The committee will maintain the monthly redemption cap on agency debt and agency mortgage-backed securities at $35 billion. Waller was the one who supported no change for the federal funds target range, but preferred to continue the current pace of decline in securities holdings. So Waller wanted more QT. Everyone else was fine with a little bit less QT, but all of the Fed presidents basically admitted that it is not time to cut rates yet. I feel like it's dovish. Yeah, I feel like it's dovish. I mean, like that core sort of like summary they put out is dovish. Now, what Jay Powell says today is either going to be dovish or hawkish based on what he talks about in 7 minutes, but that's not necessarily super hawkish if pretty much every Fed president, 11 out of 12 of them, say, yeah, we don't need to do QT as much as we were doing before. And quite frankly, again, for all of those of you that are out there that believe we are closer to a recession than not, and I know a lot of you probably believe that there's things that are rumbling in the economy that could lead us to a recession. You kind of got to stop QT and you got to cut rates as soon as you can to provide a cushion for when we inevitably get slammed. It doesn't turn into like an epic collapse, but it turns into a hopefully painful drop that's not like cataclysmic. And then rate cuts and quantitative easing are kind of the ways that we cushion that. The question is the Fed going to be late to the party, or are we going to react versus anticipate? And then cut rates, which by that point, it's too late. Bitcoin right here is up 1.6%. PayPal's up 1.2%. SoFi's up 5.6%. Snapchat's up 3%. I mean, Snapchat up 3% just tells you how much the market kind of already likes what Jay Powell has said. Netflix is up 3%. The Dow Jones is up 0.5%. The Nasdaq's up 1%. Google's up 2%. And granted, it's a little bit of a bounce from yesterday because yesterday was kind of ugly across a lot of these names. But it is nice to see some of this green before we get into what Jay Powell is going to say. QT tips too far into your ears are painful. That is true. That is also true. All right. So let me ask in the chat if you guys believe this or not, or the better question is, are we Jay Powell? We're not going to really know till 3:30. Any like pumps we see. I mean, I'm going to be excited if we see some crazy pumps while Jay Powell's talking, but I will know in the back of my head that until we get to 3:30, 3:45, we're not really going to know how the market's thinking of it. And the only reason I'm saying this is because the last 3 times I've done this, that is the time range where shit starts hitting the fan or we start going up. And the last 2 times it's been shit hits the fan. So those last 30 minutes, we're going to find out what happens. This stream will also go right into the market close. So once we're done with Jay Powell, we will get into the market close. I think Steve's going to call in around 4:30. So he'll be on a little bit later into the close. Rate pause plus balance sheet reduction equals more liquidity. If we get a rate cut, that is what really makes your equation make sense. Then we get a lot more liquidity, but we're not getting the rate cut yet. May is when we got to see if this ends up happening. Tesla right here up 3.7%. The probabilities for May that are updated as of 10 minutes ago are now 18%. So still holding at 18%. No change there. June probabilities are at 51%. So you had some firms come out today saying we're not going to get it till September. Most of the market's betting that June is at least the beginning of that first cut. If we get that 25 bips in May and we don't have this crazy tariff stuff happen after April 2nd, I mean, that could be a little bit of a recipe for a run towards the end of the first half of the year. ARK sold their Meta position today. ARK sold a ton of Meta over the past week. They've been buying Amazon more than Meta, but yes, they have been selling some of their Meta. ARK's been buying Tempest as well. Tempest AI. She actually bought Palantir, Hood. She's Tesla. She sold Rocket Lab and SoFi. Not all of Rocket Lab. She sold all of SoFi. She sold like I think 10% of her Rocket Lab. But the main stocks I've seen ARK been buying is genomic stocks. To be honest, those are the main ones they've been like really starting to get into a lot more. ARK confuses me. Yes, they confuse me as well. I don't get some of the moves they make, but that's what they're doing. The Fed, did they cut rates? The Fed did not cut rates. The Fed paused rates. Yeah, and we're going to see, dude, is this a dead cat bounce today? Is this a dead cat bounce on the pausing of rates and the hopeful dovishness of Jay Powell? Or are we going to actually see some momentum? The reason I'm skeptical of this is because I feel like none of these moves are really going to matter until April 2nd. Like that's when it's going to be really important. We said on the beginning of the market or at the end of the market open today that Lutnick has been in conversations today with a variety of individuals from Canada that are making him think. He put out a statement that it seems likely we are going to negotiate on lowering the extent of tariffs. To me, that reads that we're just going to straight up not do the tariffs. But that's my belief. We'll end up seeing if it happens. But that is the current thing that we are going to have to wait till April 2nd to see. Also, Trump tweeted about the Zelensky conversation. We got Jay Powell on in about 2 minutes. What did Trump say? I believe he said it was a productive conversation. If I'm not wrong, he said, just completed a very good telephone call with Zelensky of Ukraine. It lasted approximately 1 hour. Much of the discussion was based on the call made yesterday with President Putin in order to align both Russia and Ukraine in terms of the requests and needs. We are very much on track, and I will ask Secretary of State Marco Rubio and National Security Advisor Michael Waltz to give an accurate description of the points discussed. The statement will be put out shortly. So if that statement is bullish, and bullish meaning that they are closer to peace than not, and closer to coming to a ceasefire with Ukraine and Russia than not, then yeah, we should be getting potentially a little bit of a catalyst for the markets. But we will find out when they release that statement in a bit. All right, Jay Powell should be on in about 2 minutes. Again, the Fed officially has not cut rates. Trump has not made any comment on this lack of a rate cut. Trump probably knew there was not going to be a rate cut, but we are going to get a ton of comments from Jay Powell in just a little bit and see what he has to say.
Lows like we did, lowest level since September 2022. Guess when we bottom? October 2022. So that to me was a sign, okay, maybe it's a little of a capitulation phase. And then when you look at it over the long term, we had our 3 lowest ratings of sentiment going back to when? 2009. That was a historic low. I don't know if this is a historic low, but when I see readings like that, I'll take the other side of that trade every time. But we do have a lot of volatility coming out of Washington. So one data point at a time. But I think this is a tradable bounce. And let's see if we can get back a little higher than here.
Does tech kind of go back into the leadership here, as we've seen a little bit over the past couple of sessions, or do you have to look elsewhere?
Well, no, I think tech should come back, at least lead from a trading point of view, considering that technology and discretionary, the 2 biggest sectors that usually lead us on these rallies, those Mag 7 names have been lagging. You get a bounce, it's going to take the market higher with it, because under the surface, it hasn't been the worst market in the world. In fact, Friday and Monday, we had 90% upside days. So to me, that's strength, and usually that will lead us to at least a near-term rally. Let's see what Jay Powell says, and maybe he throws cold water on it. But technically, I think we're set up for a nice little bounce here.
I know today's all about the Fed. We could jump out any time, but Microsoft, what was the step? You know what? Jay Powell's walk.
8-week losing.
Jay, thank you. Jay Powell up right now.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. Labor market conditions are solid, and inflation has moved closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We also made the technical decision to slow the pace of decline in the size of our balance sheet. I'll have more to say about these decisions after briefly reviewing economic developments. Economic activity continued to expand at a solid pace in the fourth quarter of last year, with GDP rising at 2.3%. Recent indications, however, point to a moderation in consumer spending following the rapid growth seen over the second half of 2024. Surveys of households and businesses point to heightened uncertainty about the economic outlook. It remains to be seen how these developments might affect future spending and investment. In our summary of economic projections, the median participant projects GDP to rise 1.7% this year, somewhat lower than projected in December, and to rise a bit below 2% over the next 2 years. In the labor market, conditions remain solid. Payroll job gains averaged 200,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and is held in a narrow range for the past year. The jobs to workers gap has held steady for several months. Wages are growing faster than inflation and at a more sustainable pace than earlier in the pandemic recovery. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year and 4.3% over the next 2 years. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 2.8%. Some near-term measures of inflation expectations have recently moved up. We see this in both market and survey-based measures, and survey respondents, both consumers and businesses, are mentioning tariffs as a driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.7% this year and 2.2% next year, a little higher than projected in December. In 2027, the median projection is at our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. Looking ahead, the new administration is in the process of implementing significant policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. It is the net effect of these policy changes that will matter for the economy and for the path of monetary policy. While there have been recent developments in some of these areas, especially trade policy, uncertainty around the changes and their effects on the economic outlook is high. As we parse the incoming information, we're focused on separating the signal from the noise as the outlook evolves. As we say in our statement, in considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We do not need to be in a hurry to adjust our policy stance, and we are well positioned to wait for greater clarity. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. An admittedly challenging exercise at this time in light of considerable uncertainty. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of this year and 3.4% at the end of next year, unchanged from December. While these individual forecasts are always subject to uncertainty, as I noted, uncertainty today is unusually elevated. And of course, these projections are not a committee plan or a decision. Policy is not on a preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Our current policy stance is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. At today's meeting, we also decided to slow the pace of decline in our balance sheet. Since we began balance sheet runoff, our securities holdings have declined by more than $2 trillion. While market indicators continue to suggest that the quantity of reserves remains abundant, we have seen some signs of increased tightness in money markets. Beginning in April, the monthly cap on Treasury redemptions will be lowered from $25 billion to $5 billion. Consistent with the committee's intention to hold primarily Treasury securities in the longer run, we are leaving the cap on agency securities unchanged. This action has no implications for our intended stance of monetary policy and should not affect the size of our balance sheet over the medium term. The committee also continued its discussions as part of our 5-year review of our monetary policy framework. At this meeting, we focused on labor market dynamics and our maximum employment goal. As we have indicated, our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I will look forward to your questions.
All right, here we go. This is when the market reacts.
Howard Schneider with Reuters. Thanks for your time. So 2 things on sort of the real side here, inflation and then GDP. How much of the higher inflation forecast for this year is due to tariffs? And since the policy path remains the same, are you effectively reading this as a one-time price level shock?
Okay, so how much of it is tariff? So let me say that it is going to be very difficult to have a precise assessment of how much of inflation is coming from tariffs and from other, and that's already the case. You may have seen that goods inflation moved up pretty significantly in the first 2 months of the year. Trying to track that back to actual tariff increases, given what was tariffed and what was not, very, very challenging. So some of it, the answer is clearly some of it. A good part of it is coming from tariffs, but we'll be working, and so will other forecasters, to try to find the best possible way to separate non-tariff inflation from tariff inflation. In terms of your sort of looking through question, too soon to say about that. As I've mentioned, it can be the case that it's appropriate sometimes to look through inflation if it's going to go away quickly without action by us, if it's transitory. And that can be the case in the case of tariff inflation. I think that would depend on the tariff inflation moving through fairly quickly, and it would depend critically as well on inflation expectations being well anchored, longer term inflation expectations being well anchored.
Well, I guess I'm looking at the out years here, and the fact that the policy path doesn't change at all, and inflation is unchanged in the out years also. Doesn't that imply you all have basically decided that there is no signal here, and that it's just we're back to transitory again?
And so I think that's kind of the base case. But as I said, we really can't know that. We're going to have to see how things actually work out. And the fact that there wasn't much change, I think that's partly because you see weaker growth but higher inflation. They kind of offset, and also, frankly, a little bit of inertia. When it comes to changing something in this highly uncertain environment, I think there's a level of inertia where you just say, maybe I'll stay where I am.
Thank you. Colby Smith with the New York Times. You just described inflation expectations as well anchored, but has your confidence in that assessment changed at all, given the increase in certain measures and the high degree of uncertainty expressed by businesses, households, and forecasters?
So on inflation expectations, of course, we do monitor inflation expectations very, very carefully, basically every source we can find, and short-term, long-term, households, businesses, forecasters, market-based. And I think the picture broadly is this: you do see increases widely in short-term inflation expectations, and people who fill out surveys and answer questionnaires are pointing to tariffs about that. If you look in the survey world, if you look a little further out, you really don't see much in the way of an increase. Longer-term inflation expectations are mostly well anchored. If you look at the New York, for example, then you have market-based, and it's the same pattern. People in markets are pricing in break-evens. Some higher inflation over the next year must be related to tariffs. We know from the surveys. But if you look out 5 years or the 5-year forward, you'll see that break-evens are either flat or actually slightly down in the case of the longer-term one. So we look at that, and we will be watching all of it very, very carefully. We do not take anything for granted. It's at the very heart of our framework, anchored inflation expectations, but that's what you see right now.
And how much weight do you put on the deterioration in consumer confidence surveys? You said recently that this is perhaps not the best indication of future spending, but I'm curious, what you think is behind this deterioration and to what extent it could be a leading indicator for hard data.
So let's start with the hard data. We do see pretty solid hard data still. So growth looks like it's maybe moderating a bit, consumer spending moderating a bit, but still at a solid pace. Unemployment's 4.1%. Job creation most recently has been at a healthy level. Inflation has started to move up now, we think partly in response to tariffs, and there may be a delay in further progress over the course of this year. So that's the hard data. Overall, it's a solid picture. The survey data, both household and businesses, show significant rise in uncertainty and significant concerns about downside risks. So how do we think about that? And that is the question. As I mentioned the other day, as you pointed out, the relationship between survey data and actual economic activity hasn't been very tight. There have been plenty of times where people are saying very downbeat things about the economy and then going out and buying a new car. But we don't know that will be the case here. We will be watching very carefully for signs of weakness in the real data. Of course we will. But given where we are, we think our policy's in a good place to react to what comes, and we think that the right thing to do is to wait here for greater clarity about what the economy is doing.
Nick Timmeros, The Wall Street Journal. Chair Powell, Chair Greenspan once defined price stability as an environment in which inflation is so low and stable over time that it doesn't materially enter into the decisions of households and firms.
Can you say that today, that we have that price stability, that households and businesses are ignoring price growth?
When you see buy in advance psychology, big changes in inventories, and surveys that show consumers, at least in the short run, expect higher inflation.
So I do like that definition a lot. In fact, I used it at the recent conference where I spoke. So I think a world where people can make their daily economic decisions in businesses and they're not having to think about the possibility of significantly high inflation. We know inflation will bounce around. That is price stability. I think we were getting closer and closer to that. I wouldn't say we were at that. The inflation was running around 2.5% for some time. I do think with the arrival of the tariff inflation, further progress may be delayed. The SEP doesn't really show further downward progress on inflation this year, and that's really due to the tariffs coming in. So delayed, but if you look at our forecasts, we do see ourselves getting back into the low twos in 26 and then down to 2 by 27, of course, highly uncertain. So I see progress having been made toward that, and then progress in the future. I think that progress is probably delayed for the time being.
If that's the case, why are there cuts in the SEP for 2025?
So again, people wrote down 2 cuts the last time, and they look at they wrote down meaningful decline in growth from 2.1 to 1.7 in 2025, a tick up in the unemployment rate, so not much there, but core inflation up by 0.3. And so those kind of balance each other out. So people, not everybody, but on balance, people wrote down similar numbers. The changes aren't that big. The other factor, though, as I mentioned, is just really high uncertainty. What would you write down? I mean, it's really hard to know how this is going to work out. And again, we think our policy is in a good place. We think it's a good place where we can move in the direction where we need to. But in the meantime, it's really appropriate to wait for further clarity. And of course, the costs of doing that, given that the economy is still solid, are very low.
That was kind of dovish.
Thank you, Mr. Chairman. Edward Lawrence with Fox Business. So with near 4% unemployment rate, that should be low enough to bring people in from the sidelines in terms of hiring. But we're seeing the hiring rates have been stuck at 2023, 2024 levels. So what's going on there?
Yeah, so that's a feature has been for some time a feature of this labor market. You have pretty high participation accounting for aging. You've got wages that are consistent with 2% inflation, assuming that we're going to keep getting relatively high productivity. We've got unemployment, pretty close to its natural level. But the hiring rate is quite low, but so is the layoff rate. So you look at initial claims or layoffs. So you're not seeing people losing their jobs, but you're seeing that people who don't have a job having to wait longer and longer. And, the question is, which way does that break? If we were to see a meaningful increase in layoffs, then that would probably translate fairly quickly into unemployment, because people are, it's not a big hiring market. We've been watching that, and it's just not in the data. It hasn't happened. What we've had is a low firing, low hiring situation, and it seems to be in balance now for the last 6, 7, 8 months. That's where we are. There's healthy levels of job creation too. So overall, it's a labor market that's in balance, and we watch it very carefully.
So then, have we seen the new administration's policies in the economic numbers yet? And when do you anticipate that happening?
In labor or in other?
In labor and inflation, just across the economy, have we started to see the new policies take effect in the numbers?
Only in a kind of an early way. I mean, it's only been a few months, right? For example, the layoffs that are happening here are, they're certainly meaningful to the people involved, and they may be meaningful to a particular neighborhood or region or area, but at the national level, they're not significant yet. But we don't know. We don't know how far that will go. We'll find out much more. I mentioned that you saw we've had two very strong goods inflation readings in the last 2 months, which is very unexpected. I think hard to trace it to specific tariffs, but it must have something to do with, it's either noise and it'll come back, and that's very possible too. But if it is persistent, then it must be to do with people buying ahead of tariffs or raising prices ahead of tariffs and things like that. Those kinds of things happen, and they're very, very hard to capture because so much of it is indirect. A great example is their washing machines were tariffed in the last round of tariffs, and prices went up. But prices also went up on dryers, which were not tariffed. So the manufacturers they just kind of followed the crowd and raised it. So things happen very indirectly. And so there'll be a lot of work done in coming months to try to trace all that through. But ultimately, though, it's too soon to be seeing significant effects in economic data.
Craig Torres from Bloomberg News. Thanks, Chair Powell. You said transitory price increases from tariffs are the base case. Transitory is the base case. Wasn't it the base case last time?
Oh boy.
Didn't the FOMC forecast lower inflation ahead last time? And wasn't the lesson that it quickly got into services, haircuts, daycare, everything else? And so I'm just wondering why the 9 aren't taking that on board and are cutting twice this year.
Big question.
When you say last time, are you talking about the last
pandemic? Yes, during the
because
pandemic.
you could have been talking about the last time there were tariffs, in which case the inflation was transitory. Yeah, no, of course we're well aware of that, and it's still the truth. If there's an inflationary impulse that's going to go away on its own, it's not the right policy to tighten policy, because by the time you have your effect, you're in effect by design, you are lowering economic activity and employment. And if that's not necessary, you don't want to do it. In real time, as we know, it's hard to make that judgment. And we're well aware, of what happened, obviously, with the pandemic inflation. But I mean, we have to look at this as a different situation. There are differences and similarities. I mean, it's a different time. We haven't had real price stability fully reestablished yet, and we have to keep that in mind. And we hear that people are very reluctant to take on to allow prices to go up. At the same time, we hear that businesses are intending to pass many of these prices through. So it's hard to say how this is going to work out.
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman. The Bank of Canada, in its last policy statement, said monetary policy cannot offset the impacts of a trade war. What it can and must do is ensure that higher prices do not lead to ongoing inflation. I wonder if that kind of reflects your own sense of prioritization faced with higher prices and weaker growth, that the idea is you have to take care of inflation.
So we have two goals, right? We have maximum employment and price stability, and we have to balance those. And there can be situations in which they're in tension, right? And we actually have a provision in our consensus statement that says what we should do in that case. That's a very challenging, situation for any central bank, and certainly for us. And so what we say that we'll do is we'll look how far each of those two goals is, each of those two measures is from its goal. And then we'll ask how long we think it might take to get back to the goal for each of them. And we'll make a judgment because our tools work in one direction. We're either tightening or loosening. So it's a very challenging situation. Let me say, we don't have that situation right now. That's not where the economy is at all. It's also not where the forecast is. I don't know any mainstream forecast that really shows significant problems like that.
Well, just to follow up, yesterday, the UCLA Anderson forecast said there's high probability of a recession. Where do you stand on whether or not the slowdown you're seeing creates a higher probability or concern that you may have on recession? Thank you.
There's always an unconditional possibility of a recession. It might be broadly in the range of 1 in 4 at any time. If you look back through the years, it could be within 12 months, a 1 in 4 chance of a recession. So the question is whether this current situation, those possibilities are elevated. I will say this: we don't make such a forecast. If you look at outside forecasts, forecasters have generally raised, a number of them have raised their possibility of a recession somewhat, but still at relatively moderate levels, still in the region of the traditional, because they were extremely low. If you go back 2 months, people were saying that the likelihood of a recession was extremely low. So has moved up, but it's not high.
Hi, thank you. Chris Rugaber at Associated Press. As you know, I guess last night, President Trump fired 2 members of the Federal Trade Commission, an independent agency, and this could cause the kind of legal fight about the administration's power to fire independent people. If those firings stand, is that a threat to the Fed's independence? Could he do the same thing to the Fed board?
So I think I did answer that question in this very room some time ago, and I no desire to change that answer and have nothing new for you on that today.
Well, well, maybe I have another mulligan.
Jay Powell avoiding it.
As you know, I wanted to go back to the consumer sentiment, particularly the inflation expectations in the University of Michigan survey. In the summer of 2022, you cited the rise in the long-term inflation expectations in that index as the reason that you went big with a 3/4 point hike. So I know you've talked about all the different measures now, but you seem to not be placing the same weight on that. And so I'm just wondering, are you dismissing that, what we saw last week from the University of Michigan, or does that carry the same weight as it did in the past?
So I mentioned it back then, but in no way did I place a huge weight on it. I think that was a ex post story, but it wasn't the case. That was a preliminary reading, and so is this. And it's also, this is that Michigan, the one you're referring to, the longer term thing. We look at it. We don't dismiss data that we don't like. We force ourselves to look at it, but it is an outlier compared to market-based and compared to other survey-based assessments of longer run inflation expectations. So we got to keep that in mind. And I would just say we look at all of them, and that one's kind of an outlier, but nonetheless we take notice of it.
Michael McKee from Bloomberg Radio and Television. There's a worry on Wall Street that when you say you want to study the net effect of the fiscal policies we may see on the economy, that you would end up waiting too long and be behind the curve in responding to any downturn. How can you reassure people that you can spot a problem early enough unless you decide to be preemptive?
Yeah, look, we're aware of we're well aware of how things are going to evolve and the timeframes and all that. And we will use our tools to foster achievement of our goals to the best we can. And of course, we're going to try to be timely with that. For right now, the hard data are pretty solid. We are obviously aware of the soft sentiment data and high uncertainty, and we're watching that carefully. And we think it's a good time for us to wait for further clarity before we consider adjusting our policy stance.
do you think it's going to be hard to get clarity in a government by tweet? I mean, do you have a feeling that at some point you actually will have a forecast you can trust?
Yes, I think we will. It's hard to say when that will be. These decisions are going to be made and they're going to be implemented, and then we'll know. At that point, we'll know what the decisions are, and we'll have to make assessments then about their implications for the economy. Those things will happen. A lot of them will happen over the course of, in coming months, certainly over the course of this year, and we'll be adapting as we go.
Rachel.
Hi, Chair Powell. Rachel Siegal from the Washington Post. Thank you for taking our questions. At the beginning, you were talking about separating the signal from the noise and tariff inflation from non-tariff inflation. Can you walk us through what that looked like over the last couple of months, if there were specifics from the January meeting to now that helped you make those distinctions?
So when we say separating the signal from the noise, that's just a way of saying that things are highly uncertain and that, you're reading about developments. The news is full of developments of tariffs being put on and taken off and things like that. Some of that is noise in the sense that it's not really telling you anything. You're trying to extract a signal from that. And the signal is what's going to be the effect on economic activity, on inflation, on employment, and all those things. So that's really when we say signal and noise. Sorry, the second thing was?
Or similarly for tariff inflation, non-tariff inflation, ways that you're making the distinction.
That's sort of a special case of that. The idea being, and I do think that the first 2 months of this year are a great example. You've got high readings for goods inflation after a string of readings that average close to zero. And you have to ask, it's coming during tariffs, but you can't. It's very hard to actually scientifically go back and match up those increases and say, yes, I can prove that that's from tariffs, but it kind of has to be to some extent. Plus noise. There can be idiosyncratic readings in various categories which will shortly reverse, and that happens too, and that could be a big piece of it. I think we'll know in a couple of months. We'll know whether those were, where that really was from. But that's another case where I think it's going to be very, very challenging to unpack the inflation that we see over the course of this year and be able to say with confidence how much of that came from inflation and how much of it, from tariffs and how much of it didn't. But that's what we'll be doing. We'll be doing that, and so will everybody else, and we'll all be trying very hard to make that assessment. And I'm sure we will make a lot of progress on that, and we already have. But it's going to be a challenge.
Do you have a sense yet as to what in your mind would make something cross from noise to a signal, what that threshold would look like?
It would depend on what we're talking about. I mean, obviously, you're looking for direct evidence that particular pieces of inflation are or are clearly not caused by tariffs. For example, if it's something that was, in the service sector that was far away from anything that's tariffed, you might think, okay, well, that is like, frankly, housing services inflation. Which by the way has been behaving well, which for some time was kind of our problem. Now it's slow, but it's definitely moving down in a very good way. It's more now with goods and to some extent with non-housing services inflation.
Thanks for taking our questions, Chair Powell. Kelly O'Grady, CBS News. So consumer sentiment has dipped dramatically, but you say the economy and the hard data is still solid. What is your message to consumers that clearly disagree and don't feel that strength? Because the hard data they're looking at is their grocery bill.
Okay, so a couple things. The grocery bill is about past inflation, really. There was inflation in 21, 2, and 3, and prices went up. The current level, it's not the change in prices. It's they're unhappy, and they're not wrong to be unhappy that prices went up quite a bit, and they're paying a lot for those things. So I think that is the fundamental fact, and has been for a long time, a couple of years, why people are unhappy with the economy. It's not that the economy is not growing. It's not that inflation is really high. It's not that unemployment is high. It's none of those things. We have, 4.1% unemployment. We've got 2% growth, and it's a pretty good economy. But people are unhappy because of the price level, and we completely understand and accept that.
And just to follow up, why are you still projecting 2 rate cuts this year if your own projections show inflation higher for longer? Does that mean you see a slowdown in economic growth as a real threat?
So I think remember we came into this with, at the December meeting, the median was 2 cuts, the median was. And so you come in and you see, broadly speaking, weaker growth, but higher inflation. And they kind of balance each other out. So you think, and unemployment is really, there's really only a 1/10 change. So there's just not a big change in the forecast. There really isn't. Modest, meaningfully higher growth and meaningfully higher inflation, which call for different responses, right? So they cancel each other out, and people just said, okay, I'm going to stay here. But the second factor is it's so highly uncertain. It is just, we're sitting here thinking, and we obviously are in touch with businesses and households all over the country. We have an extraordinary network of contacts that come in through the reserve banks and put in the beige book, and also through contacts at the board. And we get all that. And we do understand that sentiment has fallen off pretty sharply, but economic activity has not yet. And so we're watching carefully. So I would tell people that the economy seems to be healthy. We understand that sentiment is quite negative at this time. And that probably has to do with, turmoil at the beginning of an administration that's making, big changes in areas of policy. And that's probably part of it. I do think the underlying unhappiness people have about the economy, though, is more at the price level.
Victoria. Hi, Victoria Guido with Politico. I wanted to ask, first of all, if you could clarify, you were talking about how tariffs were a good part of the uptick in the inflation forecast. And I was just wondering what that specifically refers to. Is that the tariffs that have already been put in place? Is that anticipating some of the tariffs that might be coming on April 2nd? And then also, if you wouldn't mind, talking a little more about the balance sheet decision and what drove that. Did that have anything to do with expectations of how the debt ceiling, raising the debt ceiling, might affect the reserve supply?
Yeah. So in the SEP, you'll see that there's not further progress on core inflation this year. We're kind of flatlining, going sideways. We don't ask people to write down how much of this is from tariffs and how much of it is not, but some of it is from tariffs. We know that tariffs are coming in. We know that they're probably already, all forecasters have tariff inflation affecting core PCE inflation, core CPI inflation this year, without exception. I'm not aware of an exception. So it's in there. I can't tell you how much of that it is. In terms of the balance sheet, so yeah, I think, I guess the way I'd say it is, it was the flows in and out of the TGA that got us thinking about it. But as we thought about it, we really came to the view that this was a good time to make the move that we made. And broadly, committee came around to the view that we would do the same thing we'd already done, which is I guess in June, was it June, whenever it was, we lowered the pace of QT, and we're just going to do that again. We're going to cut it roughly in half. And the sense of that is, if you're cutting the pace of QT roughly in half, then the runway is probably doubled. Okay, so it's going to be slower for longer, and people really like that. People thought that's a good idea. It's like a plane. You can think of it like a plane coming in for a landing. As we get closer, and we by the way, we still think that reserves are abundant. Although you begin to see some of the things we look at begin to react a little bit, but we still think that they're abundant. And of course, now the TGA is emptying out, so reserves are higher now, so you can't really see the underlying signal. So we came around to the view, and it had a lot of appeal, and so we did it. It has no implications at all for monetary policy. It has no implications at all for the ultimate size of the balance sheet. It isn't sending a signal in any hidden way that you can try to tease out. It's just not there. We're basically, it's very consistent with our plans and our practices that we've published and that we've followed since we began this, what is a very successful, rundown of the balance sheet. Again, the second time that we've slowed the pace, and we've said that we would stop when we were somewhat above the level we judge as ample. And clearly we're not at that level yet, but we're going to be approaching it more slowly. It's a common sense kind of a thing, and it had pretty broad appeal, I will say.
Claire Jones, Financial Times. You said in January, Chair Powell, that inflation expectations remained well anchored. Would you still say they remain well anchored today? And just to reiterate the question others have asked, if the Not so well anchored. Why hasn't there been a more radical shift to the policy path today? Thank you.
So when we talk about inflation expectations being well anchored, we're talking about longer run inflation expectations. And they really haven't moved much. I mean, if at all. There's one reading that everyone's focusing on that it's higher, but the other survey readings and the market-based readings all show relatively, well anchored inflation expectations. You would expect that expectations of inflation over the course of a year would move around because conditions change. And in this case, we have tariffs coming in. We don't know how big, there's so many things we don't know, but we kind of know there are going to be tariffs, and they tend to bring growth down. They tend to bring inflation up in the first instance. So I would say, I'm not dismissing what we're seeing in short-term inflation expectations. We, as I mentioned, follow that very carefully. But when we say expectations are well anchored, we're really looking at longer terms, 5-year and out. And there's really no story to tell 5 years and out, either in market-based or in surveys. But we'll watch it. I mean, we're not we're not going to miss any evidence that longer term or medium term inflation expectations are moving.
Chair Powell, Neil Irwin with Axios. Treasury Secretary Bessent has observed that a large share of job growth over the last couple of years has been in what he calls government or government adjacent sectors, healthcare, education. Do you agree that there's some weakness in underlying private job growth? And do you see the composition of job growth as something that has policy implications?
So that has been the case. We talked about that over the course of the last year. There were some good number of months and times when a lot of the job creation was concentrated in, educational institutions, healthcare, state governments, things like that. There were also times when private sector job growth has been moving in a healthy range. I mean, they're all jobs, but and remember, we're at very low unemployment for quite a time now. So I think it's a good labor market, but it's something that we monitor carefully. From our standpoint, employment is employment. But the elected government is entitled to have, we don't have policies that address different kinds of employment, but the elected government has a different role, and they can have those.
Here, a quick QT question. Does the committee envision at some point tapering the MBS runoff as well?
I think tapering it, I don't know. There's no plan to do that. At a certain point, we'll stop runoff. And we may or may not stop MBS runoff, though, because we want to stop runoff in net at some point. We haven't made any decisions about that. We want the MBS to roll off our balance sheet. We really strongly desire that. So, but we haven't made any decisions about that. I think we'd look carefully at letting that keep going, but hold the overall size of the balance sheet in, constant at some point, a point that we're not out yet.
Simon Rabinovich with The Economist. Thank you, Chair Powell. Several times today, you said that you feel you're well positioned to wait for greater clarity. At the same time, you could point to quite a few growth risks at the moment. We've seen a stock market that's gone quite wobbly, rapidly cooling housing sales, plunge in confidence surveys. Today, not only did the S&P mark down the growth outlook, 17 of 19 see risks to the downside. So my question is, how confident are you that you're well positioned, or is that one more thing that you're uncertain about?
I'm confident that we're well positioned in the sense that we're well positioned to move in the direction we'll need to move. I don't know anyone who has a lot of confidence in their forecast. I mean, the point is we are at a place where we can cut, or we can hold what is clearly a restrictive stance of policy. And that's what I mean. I think that's well positioned. Forecasting right now, forecasting is always very, very hard. And in the current situation, I just think uncertainty is remarkably high.
And sorry, standing here today, would you be surprised to pivot back towards rate cuts in May?
I think we're not going to be in any hurry to move. As I mentioned, I think we're well positioned to wait for further clarity and not in any hurry.
He didn't make it that easy for us. He did not say May.
Matt Egan with CNN. Thank you, Chair Powell. The Fed statement released today removed a line that previously said the committee judges that the risks to achieving its employment and inflation goals are roughly in balance. Can you explain the decision to remove that line? Does it mean that you're now more concerned about inflation or about employment?
Actually, it does not mean either of those things. Sometimes with language, it lives its useful life, and then we take it off, and that was the case. So there's really not meant to be any signal here. Over the past year, conveying the sense of the balance of risks was important, that they be in balance or close to being in balance. That was useful as we approached liftoff, if you remember. But we're past that. Or sorry, no, beginning to cut. So we just took it out. I actually would say that the more important thing now about risks, and this is in the pages like 10, 11, 12 of the SEP, if you look, participants widely raised their estimate of the risks to of uncertainty, but also of the risks to growth and our employment and inflation mandates. That's a more salient point now than whether they're in balance.
Just on the stock market, the stock market has obviously declined significantly since the Fed last met. Are you concerned at all about some of the market volatility having a real economic impact in terms of hurting business spending or consumer spending, especially among higher income households?
So financial conditions matter to us because, financial conditions are the main channel to the real economy through which our policy has its effects. So they're important. But what matters from a Fed standpoint for the macro economy is material changes to overall financial conditions that are persistent, that last for a while, long enough to actually affect economic activity. So that's what we're looking for. I'm not going to opine on the appropriate level of any market, equity, debt, commodities, or anything like that. And I would just point you to the bigger picture again. The real economy, the hard data are still in reasonably good shape. It's the soft data, it's the surveys that are showing, significant concerns, downside risks, and those kind of things. We don't dismiss that. We're watching it carefully, but we don't want to get ahead of that. We want to focus on the hard data. If that's going to affect the hard data, we should know it very quickly, and of course we'll understand that. But you don't see that yet.
Jennifer. Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. As you look to navigate higher inflation and lower growth, the Fed has talked about heeding the lessons from the 1970s. Is the Fed willing to have a recession if it means breaking the back of inflation?
Big question.
Well, fortunately, we're in a situation where we have seen inflation move down from higher levels to pretty close to 2%, while the unemployment rate has remained very consistent with full employment, 4.1%. So we now have inflation coming in from an exogenous source, but the underlying inflationary picture before that was, basically 2.5% inflation, I would say, and 2% growth and 4% unemployment. So that's what we did. That's what together the economy accomplished. So I don't see any reason to think that we're looking at a replay of the 70s or anything like that. Inflation, underlying inflation is still running in the twos with probably a little bit of a pickup associated with tariffs. So I don't think we're facing, I wouldn't say we're in a situation that's remotely comparable to that.
And last month, the idea of a Doge dividend was proposed, which would send $5,000 checks to every taxpayer from Doge savings. President Trump and Elon Musk have supported this. There's reports there could be a bill introduced on Capitol Hill. What impact might that have on household savings and spending in terms of your growth and outlook for inflation?
It's not appropriate for me to speculate on political ideas or fiscal policy for that matter. So I'm gonna pass on that one. Thank you.
Daniel.
Hi, Chair Powell. Daniel Avis from Agence France Presse. You mentioned that tariffs are already having at least some impact on inflation. I'm just wondering how you and your colleagues on the FOMC have been thinking about the possibility of retaliatory tariffs from other countries, especially with April the 2nd coming up. Was it something you considered during this meeting? Thanks.
So since the very beginning, we've had kind of a placeholder. The staff has a placeholder of a range of possible outcomes from tariffs and from trade policy generally. And they generally assume full retaliation in those. And so that's kind of baked into the numbers. What happens, it will be complicated and there will be some retaliation and some not and all that. But ultimately, they're trying to, with the placeholder, give us a broad sense of what this might look like. This, when we actually know the specifics, we'll be able to have still uncertain, but better informed forecasts. So yes, that's in there.
Last question goes to Jean.
Hi, Chair Powell. Jean Young with MNI Market News. Had a couple questions on the balance sheet change that you made. So the minutes had initially described your discussion on slowing QT as temporary until the debt ceiling is resolved. But from what you said earlier, it doesn't sound like there's a desire to kind of regain the pace of QT that we have at the moment after the debt ceiling is resolved. Is that the case?
Yeah, so we looked at pausing and we looked at slowing, and really people came together very strongly behind slowing, not pausing, for a variety of reasons. And so people really came to be, pretty strongly in favor of this move. Slows down the path and probably lengthens it, doubles it effectively by slowing by half. That people thought that's a good place to be. It'll help us assure that this path is a smooth one as we get closer and closer to that. So that's how that came about.
Well, I guess my question is more, was that meant to be a temporary measure during the debt ceiling episode, or?
It was the TGA flows, Treasury General Account flows, that got us thinking about this. But the more we thought about it, we came around to this. And it is, yes, it was provoked. The original discussion was provoked by that. But I think what we came up with, though, was broader than that and different than it. It does address that issue, but it really is also, it fits in really nicely with our principles and our plans and the things we've done before and the things we said we would do. So that's why, pretty strong support. I just say it's nothing to do with monetary policy, nothing to do with the size of the balance sheet. It's just kind of a common sense adjustment as you get closer and closer. Let's slow down a little bit again. And that way we'll be more and more confident that we're getting where we need to get. You can take our time getting there. We're shrinking the balance sheet every month. And we think it was a good play. And as I mentioned, well supported. Thanks very much.
That was Fed Chair.
All right. Jay Powell pumped up the global capital equity markets. I think we've got 10 minutes to see if we can actually maintain this pump when we get into the final 30 minutes of today's trading session. But look, it looks bullish. Robinhood is up 8%. Grab is up 3%. S&P 500 right back just under 5,700. At one point, we got to 5,715. So it's up about 1.5% on the day. Tessie was at 240. Now it's at 238. Already, you're seeing a little bit of those red candles start to form as soon as the press conference is over. There, you can see it right there, 241 to 238. Now, let's hope 238 doesn't turn into 235 and then 232. Let's hope it closes at 238. But we got 40 minutes left to see if that happens. SoFi is up 7% on the day. Again, S&P 500 up 1.42%. Carnival Cruise up 5.6%. Big Bear AI, a more speculative AI name, that's up 4.8%. Next Decade, liquefied natural gas, that's up 5.2%. NVIDIA at one point was 120.45. Now at 119.36 in the morning, it was almost at 114. Palantir is at 86.81. So we are seeing some green here. The question is if that green was justified based on anything that Jay Powell said. And so let's discuss what the heck Jay Powell said. So I put a poll in the chat, and the chat was, do we dump by close? If you haven't voted, you can still vote. We'll close it probably 5 minutes before the close. 56% of you say no, we don't dump by close. 44% of you say yes. A dump to me would, not meaning we end red on the day, but we lose a majority of the gains that we just got. So if Palantir goes back down to like 83 or 84, maybe it's still green for the day, but it got rid of all the gains that it got when Jay Powell was speaking. So in the next 40 minutes, we're going to see if this ends up playing out. So first of all, let's talk about what Jay Powell said. Now, the number one reason why I think we got the pump in the first place, outside of what Jay Powell might have said that was relatively bullish. By the way, I think he avoided the questions he didn't need to answer, like the Trump is going to kick you out of the Federal Reserve chair stuff. He avoided that. The Doge dividend stuff, didn't give them a headline on Doge. I mean, he really stayed focused on tariffs, inflation, interest rates, and the labor market. Now, he did mention tariffs were transitory. We'll talk about that in a second. That, I think, gave us a little bit of a red candle for a second, but then the markets got over it. But in terms of like giving a headline on saying something that's a little weird, he didn't really engage in that. Now, what did the Fed actually do that got the markets excited? Well, they slowed down QT. And that is why Jay Powell looked like a QT to me. And if we get a rate cut in May, he's going to be an even bigger QT, because if we get quantitative easing, not directly, but indirectly by slower QT, and we get lower rates, we've got liquidity. And liquidity is very important in order to get rate cuts. Now, what exactly is quantitative tightening? The Federal Reserve engages in QT to reduce the money supply in the economy, which helps control inflation, normalize interest rates, and unwind the expansive monetary policies used during economic downturns, such as quantitative easing. By selling assets, aka treasuries, or allowing them to mature, the Fed decreases its balance sheet, pulling liquidity out of the system to prevent overheating and maintaining economic stability. Back in 2020, we did a lot of quantitative easing. Why? Because we had a global pandemic, everything was going down, interest rates went to zero. At some point, they were below zero. And you wanted the Fed to pump in as much liquidity as possible to get the markets to feel confidence in the global financial system. By 2022, when Jay Powell realized that inflation was not transitory, we had to do QT, which at its core, in the most simplest way, it's selling off assets on the balance sheet. The Fed can artificially pump up the balance sheet, and they can take the balance sheet down. And really, for the past 2.5 years, we've been selling off assets on the balance sheet, the Federal Reserve balance sheet, not just a company balance sheet, but this is the balance sheet for the United States of America. And that has a indirect effect or a direct effect on liquidity, which then has an effect on equity prices. So why is this important? Palantir right here at 3%, NVIDIA still holding 119, but we do have some red candles right here. If we have more QT, if we have less QT, which by the way, all the Fed presidents voted for except President Waller, which is confusing to me because he's one of the most dovish ones. So I didn't expect him to vote against it. But if we have less selling of assets off the balance sheet, in particular, the main assets the Fed has are treasuries, well, we have the ability for treasuries to not have their yields spike up, because if you sell off bonds, their yields go up. If you buy bonds, their yields go down. If the Federal Reserve starts allowing banks to buy more treasuries and they stop selling at the rate at which they're selling right now, you've got a scenario where maybe, just maybe, Trump gets 3.5% on the 10-year, or at least 3.7 to 3.8%, which would be a significant reduction from 4.2. We were at 3.65 in October, as you can see right here, 3.7, or the lowest was, literally 3.68 in October. And then we spiked up to 4.8 in January. Now we're back at 4.2. If we get back to 3.7, 3.8, that would be a really nice environment, particularly for stocks, because again, if you're only going to get 3.8% on a 10-year, you might start looking at NVIDIA's cash flows and be like, NVIDIA looks kind of attractive right now. So from that perspective, I think that's the first reason we started pumping as soon as the dot plot summary of economic projections came out. Essentially, if the Fed thinks, or if the market thinks we're going to get a slower rate of QT, that's going to be beneficial for getting rate cuts. Now, what are some actual comments Jay Powell said? Well, number one, he did not guarantee a May cut. The reporters tried to ask him, and he basically said he's not going to answer that question. So he kind of said we're going to be dependent on the data. They did ask him a lot about, hey, why are you guys cutting 2 times if you're admitting that inflation is still elevated and the labor market's not necessarily weakening down? And he, in my opinion, had a pretty dovish answer. He was like, well, everyone thinks that there's a lot of uncertainties, and because of those uncertainties, we should probably be pricing in some level of monetative easing versus tightening in order to acquiesce to the potential of those uncertainties, aka tariffs, getting aggressive. Which, I think that's pretty dovish, because at the end of the day, he's basically saying, yeah, shit could hit the fan, and we just want to make sure that we're ready in case it hits the fan to cut and not be in a situation where we're overly tight. If he was hawkish, they wouldn't have got it for 2 cuts. And if he was really hawkish, he would have said, yeah, that just we don't even believe in that. We just put it there to put it there. But instead, his logic was, well, things could get bad. We don't know what's going to happen with tariffs. So we're kind of baking it in as our base case just in case something happens. And we would need to see data to go the opposite of our base case. Because when the Fed guides for this, they're basically telling the market exactly what they're going to do. And they really need to have a good argument to deviate away from that. So Jay Powell's kind of guaranteeing here, you're going to get 2 cuts. The Fed wants 3. If we get 2, then I think that wouldn't be the worst thing in the world. Now, this is one thing that Jay Powell said that's probably going to get the headlines. He did say tariff inflation potentially could be transitory. Here's a clip of him saying that right here.
It can be the case that it's appropriate sometimes to look through inflation if it's going to go away quickly without action by us, if it's transitory. And that can be the case in the case of tariff inflation. I think that would depend on the tariff inflation moving through fairly quickly, and it would depend critically as well on inflation expectations being well anchored, longer term inflation expectations being well anchored.
So, I mean, the market definitely didn't want to hear that in regards to this idea of tariffs, inflation being transitory. And the reason no one wants to hear that is because in 2022, Jay Powell said inflation in general was transitory. Now, he has more history on his side because in 2018, Trump also had tariffs. That was inflationary. The Fed hiked rates, and then in 2019, they started cutting because the trade war kind of ended by then. So he's kind of just comparing it to 2018. But obviously, it's triggering a lot of people to say tariffs are transitory because of what happened last time. Okay, markets are not necessarily dumping right now, but we are getting red candles across the board. Look at that red one on Palantir. 80, where were we at? 87.99 at the top, now 85.91. Affirm is still up 8% even with those red candles. That's how green today was. Like, you got names that are still up more than 5% even with the red. We do have 30 minutes left, 32 minutes left. So we still have some time. Tessie from 241 to 236. SoFi from 1291 to 1260. This is, again, we talked about this in the morning. In the last 30 minutes, we really get to see if we can hold the pump, but we usually get the pump when Jay Powell's speaking. S&P 500 up 1.2. It was up 1.7 at one point. Grab is up 2%. It was up 3% at one point. Meta's barely holding on to the green. Robinhood was up 8% at one point. Now it's up 5%. Like, yeah, I mean, see, this is why people say you shouldn't care about like the itty bitty nuances of the market. But like when it got to 43, like if you've just been following these pressers for a long time, you don't really buy the rip when Jay Powell speaks. Like, because there could be a chance, like it's going to be more volatile. So whoever bought it, 43.50, 43.70, 43.80, I mean, this is the most predictable red candle going into the end of the day. And maybe it reverses, but this is somewhat the benefit of caring about every syllable he says, because when you've been through this enough times, you know that, all right, this is kind of typically how the algos take it. And granted, he gave enough juice to the algos to be excited. It's just a question of, well, wait a second. In 2 weeks, we've got this massive tariff decision on April 2nd. And whatever Jay Powell said could be mute in 2 weeks based on that. So does it really make sense to get super excited to buy equities at this point? But let's see. Let's see. For traders, this is a paradise because they can just ride it all the way up and then ride it right back down. Okay, S&P 500 still up 1.2%. He did say transitory 17 times. That is correct. He said transitory many, many times, which is probably triggering some people. But he meant it in the right context. I don't think he kind of meant it in a sort of context that he's ignoring inflation. But he does love that word. That word tends to be a word he enjoys saying. A couple other things that we got from Jay Powell, and then we'll keep going from there. He said, here's a quote. He said, "I don't see a reason to think we are looking at a replay of the 70s. Underlying inflation before tariffs was basically 2.5%. I thought that was an interesting quote because one of the reporters was like, hey, do we need a recession to get inflation to come down? Which has been kind of the theory that Besant, Lutnick, and Trump were talking about. They don't use the word recession, but they talk about detox, economic pain, etc. And Jay Powell kind of disagreed with that. He was like, no, this is not like the 1970s. Obviously, Jay Powell doesn't want his legacy to be the guy who caused the recession to get inflation to come down. He wants to actually beat it. So he's saying that it's not like 1970s. And he's also saying that before tariffs, which he's correct about, core inflation was 2.5. Now it's at 2.8. So, and we don't even have tariffs that have been implemented yet at a massive scale. Maybe we get them April 2nd, maybe we don't. But if we don't, I think he's pretty confident inflation will get back to 2.5. And if we do, that's where he gets to the argument where inflation is transitory. And I mean, we're going to see if that ends up playing out. Matai says, we're not out of trouble until the uncertainty fades. We need a clear, consistent policy so business can adjust and move forward. It's that simple. Volatility until then. I agree. And right now we don't have that consistency. At least we know Jay Powell's perspective on things, which is that he is more dovish than not based on what I got from this presser. Now we just need Trump to come through with what is his tariff policy going to be. Fox Business is reporting that at 4 p.m., Trump's going to announce something big on crypto. I have no idea what that could be. I hope it's not another meme coin because that would be not good. But the headline is major update on Trump's upcoming crypto strategy after the close. Okay, one rumor, this is not a headline, but this is a rumor, is that Trump's going to announce 0% capital gains tax on crypto trading and investing in the US. I don't know if he does that, dude. I don't know if he gets away with 0% capital gains. That's going to be a little tough. Let's see. Let's see if we even get an announcement. Right now, that's just a Fox headline. We might not get any real announcement. But after the bell, we'll see if we get anything. Let's also get some more coverage on JPOW, and then we'll keep going from there as we get into the close.
Me on set for the hour is Truist's Keith Lerner.
Said that the real data is still strong. He wasn't alarmed. He said he saw the sentiment drops in the consumer sentiment and some business sentiment, but didn't say that always translates into slower economic activity. But as you said, remains very flexible to move on either side. And that's sort of an optimal combination. I also think that he was pretty clear that the Fed would not react to the tariffs if they brought about price rises, which he thought would be temporary. And that was something I was definitely looking for. I was wondering, would he go against those tariffs or not? He seemed to imply that he would not go against those tariffs unless it sort of caught on to inflationary expectations or went into some other areas. And I think that the market really probably took some comfort in that statement.
And just to be clear, the dot plot, the summary of economic projections, did imply core PCE inflation going up by the end of this year to 2.8%. It had been 2.5, and yet collectively the median was still for 2 rate cuts. So there's some tolerance of higher inflation implied there. And in fact, he did say he thought that tariffs perhaps were built into that projection to some degree. Although he, as I mentioned earlier, he said, look, the Trump administration's got a lot going on with policy changes in play for immigration, trade, regulation, and of course, fiscal spending and taxation. And they're going to have to sum up the net effect of all that before deciding what it means for policy, Professor.
Yeah, and absolutely. I mean, it's a big drop from 2.1 to 1.7. It's the biggest drop that we've had in a 3-month period in Fed forecast for growth since the pandemic. I would have liked to have known how much of that drop was due to the big slowdown, as we know, in the immigration situation, and how much was a drop that he, thought could be due to the uncertainty and dislocations caused by the tariff. He didn't tease that out. Although you also note that the next 2 years also showed a slight drop in real GDP growth. So I was wondering if that is immigration or is that more tariffs? Although the very long-term growth, of course, that I think is 2028, Trump's end of office, that number wasn't changed. But I would have liked to have sort of teased out some of those sources of that real GDP change, because certainly it was substantial.
Yeah, although it's also just kind of tracking, I think, where consensus GDP growth estimates have been going. I mean, the market is backing off just a little bit from the highs. You always have to offer that disclaimer that sometimes the initial reflex move is not the one that lasts. And he really did, of course. And Keith, there was no way he couldn't emphasize the uncertainty inherent in trying to make any projections. He said, I don't know anyone who's highly confident in their forecast, and also said that he didn't know that they would be in a particular hurry to move by May. So, there's something for everyone in here.
Yeah, it's very nuanced. I mean, look at the market today. The advanced decline line's 2 to 1. So that's not rip-roaring, but you are a bit oversold. You're a little bit vulnerable to some good news. But I think ultimately we are seeing some deterioration in the economy. Even though we talked about the hard data versus soft data, economic projections are coming down. But if you look at the market as a whole, valuations have reset somewhat, but the key pillar of this bull market has been earnings. So far, those estimates haven't been cut much, but we've seen GDP estimates come down. So I really think we're going to have to see those estimates come down. That's why, even though I think, we are seeing an oversold bounce, which we thought would happen last week or start last week, I think the upside is going to be capped because we are seeing a change in the economic environment, and that's somewhat weaker. But again, a little bit of good news is going a long way the last couple of days.
Yeah.
AKA, hey, the consumer's still weak. We still have uncertainties. Jay Powell was dovish, but that dovishness is not enough to deal with these two clouds that are hanging over us, which is April 2nd, tariff volatility, uncertainty. Whenever someone says uncertainties, replace that with tariffs. That's basically what they mean. And then two is consumer confidence, right? And the fact that objectively the consumer is slowing down. Anecdotally, a lot of you guys have said in the chat that you are seeing consumers, people in your life, family, friends start to spend a little bit less, pull back some of their spending. Like we know this, right? The consumer is slowing down, and it's probably going to be defined in Q1 earnings. The question is, how badly are they slowing down? Consumer confidence being the worst since October 2022 makes it on aggregate or on balance an aggregated understanding that yes, the consumer is pulling back a little bit. But are they pulling back to the point where they're literally just not going to get a $7 latte anymore from Starbucks? You know, it doesn't get that bad, because then it's like, all right, then we got a recession. But if it doesn't get that bad, which hopefully it doesn't, Starbucks should be able to survive, and their stock shouldn't be able to get hit as bad during this time. So that's it. Those are the two things we got. We got uncertainties and we got consumer confidence. Jay Powell's speech was definitely bullish, but it wasn't enough to make new all-time highs getting through. It wasn't even enough to get back to the 200-day on the S&P, because we're still dealing with those two overhangs. Is crypto pumping? Is Bitcoin up? Bitcoin 85.3. Why do you guys think Bitcoin's pumping? Is this because less QT? Or is this because the Trump rumor that he's going to announce something big today? Pumping on the rumor is weird unless there's really good sources for that rumor. And maybe the Trump people in the crypto administration told some big media outlets that something's coming soon. And so it might be a credible pump on a big rumor. But it also just could be a QT reaction. It might be 50-50 on both those. The XRP thing was in the morning, though. The XRP thing, like the XRP case in the morning, I don't think Bitcoin would react to that right now. XRP currently is at 8%, 248, down a little bit from where it was in the morning. But that one is up 8% currently right now. Less QT means more liquidity, and Bitcoin is a vacuum cleaner of liquidity. I agree. And, you know, I was talking about this with Jason yesterday. The fact that we're holding 85,000 is incredible on Bitcoin. I mean, like, we've seen stocks just get decimated over the past couple of weeks, 30, 40% drawdowns. But and Bitcoin, yeah, it's not at 109 anymore, but it's not like it's at 60 or 50. And we've seen Bitcoin, incredibly volatile over the past couple of years, just have massive multi-month downswings. If we hold 85, I don't think people can hate it. And if we can just consolidate here before we make the next leg up, if there is a next leg up when you get more liquidity, then that would be a good thing. Netflix is green. Costco is green on the day. SMCI is up 5.8%, recovering from a bit of pain yesterday. NVIDIA and all the data center stocks like Vertiv, VST, etc., Next Era, they're all getting a little bit of a bid. NVIDIA right here, 118.74. That's up 2.8%. 117 was the low an hour ago, and 114 in the morning. Now back at 118. Tesla right here, still holding at 237. Value's getting hit from what I can see. Pepsi is red. Verizon is red. AT&T slightly green. Berkshire should be holding up. Berkshire is green, up 0.5%. Berkshire again at all-time highs. And then the S&P at 1.3. Where's ARK? We haven't looked at ARK in a minute. ARK. Does anyone still hold ARK funds at all? Or did everyone sell their ARK funds? ARK is up 5%. That's how you know it's a greeny day. I sold my ARK back in 2022. I completely got out of it. I think I sold it at 88. I think I bought it at like 112 or something. Dude, that was a wild time. When we were buying Kathy's fund. Oh my God, dude. This thing, I think at one point, like, what's the number? Like 50 billion AUM or some crazy, I mean, was it 100 billion at the peak? There's a lot of money, bro. It's a lot. And now I think it's like, yeah, 6 billion, 5.39. Now it's 5.39. People still use ARK as a hedge though. Like they either use it as a hedge to the downside, or they use it as like a super big call option when things go really green, because it still is heavily growth oriented. But yeah, at least it is still around and does have some people's assets in it. Let's get some more coverage on JPOW, and then we will get into the final 15 minutes of the market close.
You know, it's funny, Mike, I actually pulled the quote that you just quoted from the chair where he said, you know, nobody is confident in their forecast. In fact, let's just listen to it because I think it really encapsulates where the Fed is at right now.
I'm confident that we're well positioned in the sense that we're well positioned to move in the direction we'll need to move. I don't know anyone who has a lot of confidence in their forecast. I mean, the point is we are at, you know, we're at a place where we can cut, or we can hold what is clearly a restrictive stance of policy.
Now, when I think about why the market's higher, which is, of course, a little confounding, but who knows, right? Maybe is that when he talked about the options, again, it's a repeat of what he said 2 weeks ago at the U.S. Monetary Policy Conference. One is that we could cut if we need to, or we could hold if we need to, but notice no mention of possibly raising rates. And I asked him about that stagflationary quandary that the Bank of Canada addressed, and he says we're not there now, and we'll figure it out when we get there. One other point I want to make, Mike, which is that the Fed chair mentioned pages in the Summary of Economic Projections that none of us ever look at. I would just want to say, but page 9, 10, 11, I did look at them when he mentioned it. I should also always look at it, but I didn't this time. And he said, and what he pointed to was the idea that for the majority of participants, the risk to the unemployment rate is higher. The risk to growth is lower. This is the risk to their forecast. And the risk to inflation is higher.
Interesting. So labor market and inflation is what the Fed president seemed to care more about in terms of risks to the downside versus growth. Basically, they're saying, hey, we think growth is going to be fine, but the labor market could get hit, which then could hurt growth, and inflation could reaccelerate. So essentially, they care about the core things they care about versus GDP growth slowing down.
And that's where they're at right now, trying to balance all these issues right now, Mike.
Right. And, you know, because he was trying to explain why they eliminated that wording about the balance of risk being roughly equal, and yet sort of pointed to that and saying that things got exacerbated on every side of it. You know, he continues to use the mantra, Steve, that policy's in a good place, and also that you know, the cost of waiting for further clarity is relatively low because the economy is hanging in there. So, you know, altogether, he's trying to convey the idea that they have the luxury of waiting, whether the market believes so or not.
Yeah, that's right. And I think the key here, Mike, is the idea that this idea that the sentiment data has not spilled over into what we call the hard data. That's really something that is animating Fed policy right now. If that changes, if you do get a spike in inflation, if you do get a spike down in growth, well, then the Fed is going to face the question that I asked him, but they're not there right now. And I guess he has the luxury because these are yet early days in the Trump administration, and for these policies to be working their way through the system. He did say the substantial amount of the increase in inflation is probably from tariffs, but you'll note that it doesn't pass on into 2026 and 27, which is maybe an initial sign that the Fed sees this as at least one-time rise in the price level rather than a broader inflation problem.
Exactly. Steve, thanks so much. And Professor Siegal, one other thing along those lines on the soft data is the chair was not really willing to endorse a close focus on, for example, the University of Michigan inflation expectations, which have really blown out to the upside. Sort of says that survey is suspect. So I guess he didn't use it as an excuse to be more hawkish. I guess the real question is the economy still on a decent path to absorb some friction from tariffs, if that's what's going to happen first, in time, and can the Fed respond in time? I mean, this is always going to be the interplay between expectations and the Fed's ability to be timely.
Right. I mean, he did mention that the market-based long-term inflationary expectations, for instance, those that the difference between the Treasury bond rates and the TIPS rates, which is often used, has really not moved much. So that's, I think, when he was talking about that stability. Well, what did interest me is I don't think one person mentioned April 2nd, which I think is one of the most important dates we have coming up. That hopefully,
I agree,
will clarify the whole situation on tariffs, how big they will be or how they'll be negotiated, or some path to how they will be negotiated. I mean, I think that that's going to be very, very important, and it's only 2 weeks away. So hopefully things will be clarified, and certainly we'll learn from statements by the Fed members after that April 2nd date.
Right. And, before the Fed meets again, which is in early May, we're going to get the April 2nd date. We'll know presumably what we're dealing with in terms of tariff levels and breadth and everything like that. We're going to have the start of corporate earnings season. We'll probably have a better picture of what first quarter GDP was. What are your assumptions, Professor Siegal, for whether the fundamental story is going to hold together from between here and now and then?
Well, I think that really does really depend on tariffs. I mean, I've stated on your show that I think, the tariffs and the scare of the tariffs and the uncertainty of the tariffs and the on and off of the tariffs has been the by far major reason why we've had this 10% correction. If we can get clarity on what it's going to be, and if it isn't going to spark a trade war, although it was interesting that Powell did mention that the trade war retaliation was actually built into some of those forecasts. But if we could be certain that that probability is low, this market could be very much poised for a nice recovery.
Yeah,
Okay, you got Spiegel basically saying the same argument around April 2nd being the core D-Day when it comes to if this market can handle some of the dovishness by J. Powell. I just got a macro update from Tom Lee. This is what he just posted to his subscribers. Thank you, Ori, for sending me this. Tom Lee just wrote, Fed is dovish. He is ignoring Fed staff paper saying tariffs are inflationary. We argue this would be his stance. The Fed is reminding us that the Fed put exists, hence stay the course. Tom Lee says the Fed is dovish. He's ignoring the Fed staff paper about tariffs being inflationary. I mean, he quite literally did say tariffs would be transitory, right? And then he said, Tom Lee says, we already argued this would be exactly what the Fed does, which is what proves a Fed put will actually take place. Shalom, thank you for becoming a channel member. Appreciate it. Sorry if I'm saying your name wrong, but thank you for being here, and thank you for becoming a channel member. So Tom Lee continuing to believe that we have bottomed as of last week, and that it is time to move up if we can get closer to rate cuts and get away from potential tariffs. But even Tom Lee, dude, as much as I like his analysis, even he doesn't know exactly what Trump's thinking about on April 2nd. Because the most bearish scenario is Trump goes forward, there's no negotiations on tariffs, and it's just straight up 25% on everything, Mexico and Canada, which I think there's like a 1% chance that happens. Like, I really don't think. And the reason I say it's a 1% chance is because if he was going to do that, he would have done that already. The reason he keeps delaying it is because he knows that's not what he wants to do. But what will be the compromise? I don't know. And I guess we're going to have to find out. Aditya, thank you also for becoming a channel member. Really appreciate it. Thank you all for joining and becoming a channel member. Bam Ridden, thank you for the $2 super chat. Do you think it's time to start buying Tesla on this dip? We've been talking about it a lot on the show. I think at the end of the day, if you're buying Tesla, you are really buying it because of two reasons. Number one, you truly believe in the long-term vision, right? So you're just ignoring all the noise, brand damage, etc. And number two, you think sentiment is so bad, down 50%, that you'd rather take a chance DCAing here versus waiting for a better entry price, given that entry price might not ever come. The reasons you wouldn't buy Tesla is because Q1 is going to suck, right? It's like, it's literally, do you believe Q1 is going to suck way more than sentiment is bad? And I think the answer is you DCA, and you hope if Q1 really sucks, you didn't DCA as aggressively at 235, and you have more to spend below 200 if we get there. But I think there's a bull and a bear case. I mean, I can understand the argument for buying Tesla here because sentiment is so bad. Like, everyone wants the stock to be below 200. It might just not never get there. But I also think it's hard to deny Q1 numbers are not going to be good. And if their guidance for Q2, that's the other thing. If they guide that vehicle deliveries won't be good in Q2, remember, Elon guided 20 to 30% verbatim vehicle delivery growth in 2025. I don't know, based on these international numbers, how they're going to get to 20 to 30% vehicle delivery growth. Maybe the Model Y Juniper just starts like really outperforming. Maybe it's the $30,000 car if that really comes to fruition. But outside of that, I don't know if we can 20 to 30% compound this year. So I don't think waiting for Q1 is crazy, but And if you have to buy it at 270 or 280 in Q1 or 300, like, but you have more peace of mind, like, I still think that trade-off is not the worst in the world. SoFi right here, 1271, that's up 6.3. We got 9 minutes left. Market's not really dumping. We're not at the absolute high of when Jay Powell was speaking, but it's not like we've given that much back. Like Robinhood's up 7% instead of 8.2. Gave back 1%. That's really not that bad. That's not that bad at all. Yeah, Gary Black did tweet Tesla bottomed at 222. So if you care about Gary's analysis when it comes to Tesla and how he's been thinking of it, and I think I read a little bit of that tweet this morning. I think his main argument is sentiment is really bad. I think there was a couple of other points he had about deliveries and EPS numbers, but I think one of his core arguments is sentiment is just so bad right now that it makes sense to at least take a shot at Tesla here. Is Twitter down? Twitter is not down for me. It seems to be working. Yeah, for me, it's reloading. It might be down for some people, but it looks like it's up for me. Elon did buy shares in Twitter at a $44 billion valuation. So, this was the big news after the market opened. X raised at $1 billion, they raised at 32 billion and they raised $1 billion. So Elon bought at a price higher than that, but they officially today raised $1 billion. At 32 billion was the valuation. So a little bit lower than that $44 billion valuation they had last year. Also, NVIDIA bought a company. NVIDIA bought Gretel. They've acquired synthetic data startup Gretel. Has anyone heard of this company? For 9 figures? So above 320 million. The company's team and tech will be folded into NVIDIA to boost AI training for developers. NVIDIA has been expanding its synthetic data tools, aiming to solve AI's data scarcity problem and make AI model training more scalable and privacy focused. I've never heard of Greta, but I guess it is going to be part of their Cosmos synthetic data platform. And they spent a decent chunk of change on this. So we do have an acquisition right here from NVIDIA. April 3rd, we're either going to be celebrating or depressed. That's correct. April 3rd. I really, dude, I keep saying it, and maybe I'll be wrong, but I really don't think April 2nd is going to be that scary because I think they're going to come up with a deal. I don't think Mexico, Canada, the United States wants to be in the position where they're in a full-on trade war. So, I mean, hopefully, but we're going to find out soon enough in the next couple of weeks what this looks like. Let's get a little bit more coverage on this FOMC, and then we got the market close in about 5 minutes.
Reaction to today's news. So I ultimately think this market is going to move a little bit from fear to greed. But then as we move up to, say, 5,800 to 6,000 on the S&P, I just think you're going to be capped somewhat because during this period of uncertainty and when we go into the quarterly earnings season, I don't think you're going to see a lot of upside guidance going forward. So I just think we're going to be in a choppier range, and you're going to look for some tactical opportunities. But right now, you're maybe towards the lower end of that range. And, if you're a trader, you're going to trade there. If you're a longer-term investor, you buy towards the bottom side. And if you get towards the top end of the range, we're telling our clients dial back risk a little bit.
Right. Yeah. So those all-time highs are like around 6150-ish.
I think it's going to be a challenge to break through that in the near term.
All right, Keith, we'll get back to you in a little bit. A quick programming note. Scott Watt.
Okay, cool. This is Goldman Sachs analyst. Let's get his thoughts, and then we'll get into this close in a couple minutes.
I think that the meeting was, when you take it all together, just a touch more dovish for those reasons. There's also the additional taper on QT. That's not a monetary policy tool. They're very, focused on the idea that it's really rates, but nevertheless, it's also taken that way.
And so, I mean, he didn't profess, any greater vision of exactly how things are going to unfold than any of us have. But he's saying, there's these 4 policy forces, Trump administration on fiscal, immigration, trade, deregulation, and the Fed will have to assess the net effects of these things and how it bears on the economy and policy. It seems like that would take a long time to get a handle on all those things. So what do you think the next kind of 100 feet of road for the Fed is at this point ahead of it?
Well, I think it will take a while. Now, of course, we've got April 2nd. We've got the announcement. We'll see what happens in terms of tariffs, how they calculate the reciprocal tariffs in particular, because there's a big bid ask on what you can do if you just look at tariffs that our trading partners impose on us and compare that with US tariffs, that difference is very small. But if you say VAT is also tariff-like, that would imply a very big increase. So we'll learn quite a lot over the next month. But you're right. If you take all the other aspects of policy, that's going to take a long time, especially because fiscal policy is on a much slower path. And so that would suggest, it can still take a while before they actually get to cuts.
When asked directly about the prospect of a May rate cut, he tried to downplay that, right? He said, I don't know that we'd be in any hurry to make any moves. How does that jive with what you're expecting the Fed to ultimately do?
Yeah, I mean, May, I think, is highly unlikely. We have 2 cuts in the rest of the year, similar to the Fed. We've got a June cut and December. I think June is at risk of being delayed. And I certainly think, despite the slightly more dovish tone, it doesn't sound like they're super close.
Interesting. So Goldman does not think we get the May cut. I'm closing the poll right now. 54% of you said no, we will not dump by close. We got a minute 30 left until the close. I think the no's will be correct. It looks like we're going to hold on to a decent chunk of this. Unless in the next 2 minutes we get some big red candles. But S&P's up 1%. Let's see if it can close in that 1% range. SoFi's up 7. Robinhood's up 6. ARK's up 4. Tessie was at 238 or at 1.241. Now it's at 236. But unless things go right in the next 2 minutes, I think we kind of hold on. Where's NVIDIA right here? NVIDIA. Yeah, you got a nice little red candle right there at 117. Really is a trader's market, dude. If you know how to day trade or you know how to swing trade some of this stuff and you're really good at TA, like a lot of it's becoming predictable, up and down, but it's not in one direction. It's also a great market for covered calls. I mean, because as soon as you think your covered calls are under pressure, boom, you get some downside, and that helps your theta decay, and then you get to collect that premium. We'll see if we get any crypto announcement after hours. I don't think so. I mean, I hope we do. In Fox News, if they're putting it out as a headline, maybe it ends up happening, but I will be very curious to see what that crypto headline would be. Kay Hodel, thank you for becoming a channel member. Really appreciate it. Thank you for being here and being part of the show and becoming a channel member. Yes, a lot of Bart Simpson heads, correct. Micron earnings are tomorrow. So is Nike and FedEx. So tomorrow's going to be a busy day with earnings. Today, we don't really have anything. We have Five Below after hours. If anyone follows that company, ticker symbol 5, $4.6 billion company. Maybe, actually their earnings wouldn't be that bad to look at because Five Below is kind of like a dollar store to me. So if they say anything really ugly about the consumer, that can give us some insight about what's going on. But we'll see if they pump or dump after the bell. Do we know when Trump is making an announcement? We have no idea if Trump is even making an announcement, but the rumor is that after the close, we'll get something. Maybe we do, maybe we don't, but we'll see over the next hour. All right, Wednesday, March 19th, we have survived the J. Powell FOMC conference. 4 p.m., the market is now closed. All right, we get a green day. We get a green day on a Wednesday. We get a green day on Wednesday. Intel was not green. That was red. That's down 7%. I don't know why that one reversed that hard, but that one was down. Tesla was up 5% of the day. NVIDIA was up 2%. Five Below. We'll look at their earnings in a bit. That was up 2% of the day, up about 1% after hours. Robinhood was up 6.7%. Verizon was down about 1%. Starbucks was up 1%. S&P 500 closes up 1.09%. Nice to see the S&P go green. Grab was up about 2.39%. Meta 584. That was basically flat on the day. Big Bear AI was up 5%. Oklo 7.83. Venture Global was up 3%. Next Era was slightly down about 0.3%. Vertiv was up 5%. Data center play. Apple was up 1.2%. Palantir up 2.6%. Affirm up 9%. That's a nice recovery from what they lost a couple of days ago. But Affirm right here up almost 10%. And then the Qs up 1.34% on the day. And S&P 500 is green post-market as well. Mag 7 names were pretty much green. Googs got 2%. You could have got Goog yesterday at about 157, currently today at 166. We'll see if it lasts, but not a bad little dip by yesterday. Amazon right here, 195, Tessie 235, NVIDIA up 1.8% at 117, Apple 215, Microsoft at 387, and then Meta right here at 584 on the day. In terms of crypto stocks, Coinbase was up 5%. It didn't go crazy, but you would think it goes a little bit more nuclear if Trump's making a big announcement. MicroStrategy as well, back above 300. That's up 7%. So that one got some love. Marathon right here up 3.8%. The Bitcoin miners. Is anyone still heavily in the Bitcoin miners? Like really heavily? Because I feel like this trade is done with. And I feel like at this point, Bitcoin really has to explode for the Bitcoin miners to get momentum. But I don't see people talk about them anymore at all. And I think people either took their losses or they moved on. Maybe some people are kind of concentrating, or maybe there's some thesis around Marathon, CleanSpark, etc. They're good for wheeling. They're definitely good for selling calls and puts against if you can deal with the volatility. But I don't see people really put out a lot of due diligence on these companies anymore. MicroStrategy right here is up 7%. BITX, 2x leverage Bitcoin, that is up 8%. Currently right now, Celsius, was Celsius green today? Celsius, 5%. Celsius actually went up with growth stocks today versus going the inverse, which just goes to show you how dovish J Powell was today. Okay, a couple of you in the chat are saying you still have some CleanSpark. Most of you are saying you kind of took the L and just dumped it. Dude, I don't hate that. I mean, sometimes if something's dead money, you just move on. And you find another place to make back the money. Tesla right here, 236 after hours. NVIDIA down slightly after hours. 5 below. They're up 3%. I think their earnings should be coming out in a second. By the way, this just came in. This is official. Trump is speaking at the Digital Asset Summit in New York City tomorrow. I didn't even know there was going to be a Digital Asset Summit in New York City, but there is. So looks like Trump will be speaking there. Okay, 5 below. They beat on the top and the bottom on earnings. 348 versus 337 on EPS. 139 versus 139 on revenue. Slight beat on revenue, a beat on EPS. That's what you got for 5 below. Let me see if I can pull up their actual earnings, because I would love to see if we can get some insight on where they think the consumer is going right now. And then we'll keep going from there. 4 or 5 below. Imagine that was the announcement that Trump's speaking at the Bitcoin Summit. Dude, that would be bad. If that was the announcement, that would not be. I hope this wasn't the big Trump news. This came out like 20 minutes ago, so I don't think this was the big Trump news or the big crypto news, if there is big crypto news. 2.5% right now and 5 below. Hopefully not. We'll see. I keep refreshing his Truth Social. He hasn't said anything. He hasn't said anything about J Powell either. He hasn't said anything about J Powell or interest rates. So, and that letter about what him and Zelensky talked about, that also hasn't been posted yet. But the White House is going to publish that soon to see what they said. Okay, so here's what 5 below put out on their investor relations. This is what they said. Let's Command F consumer. Okay, that's in forward-looking statements. Nothing crazy there. Guidance, they're assuming 2% increase for Q1. Net income, $30 million. Net sales for the full year up 3%. Flat, or no, assuming approximate flat 3% to a 3% increase. Yeah, 5 below, not really the growth stock here. 3% increase in sales. Net income about $250 million on top of $4.3 billion in revenue. They're buying back some shares. Nothing really about consumer in this stuff. CEO said, it has been a busy 3 months at 5 below. We are executing on our key strategies around product value and store experience, and doing so with a sharpened focus on our core customer, the kid in all of us. We have a unique opportunity to deliver amazing value across a curated assortment featuring consistent newness with simplified pricing. Our focus on affordability and value is not just strategy, it's a promise to our customers. Yeah, that's not really bearish consumer or anything else like that. Okay, I guess we're going to have to listen to the call to see if there's anything about what 5 below thinks around the consumer. Dollar General, is that pumping on this? That's up about 1%. Pretty much everything else is green. Pretty much everything else, even in the after hours, dude, we're not giving it back. And if we are, it's very minimal. So then the big question becomes tomorrow. Do we get to hold on to it? Tomorrow, do we get to hold on to it? Eric says it could be a solid green market for the rest of the week. The world is ending. Crowd is running out of bullets. Tariff tantrum dog won't hunt forever. You know, I do think Trump has also, to an extent, heard the news about or felt some of the pain from the markets because he hasn't tweeted about tariffs in almost 5 days now, or 4 days since last Friday. So, I mean, if he's not posting about it anymore, either his team is really negotiating heavily and he doesn't want to say anything to mess anything up, or he got the message and just doesn't want to keep putting that volatility out there. But we're really going to find out on April 2nd. Also, we do have quad witching on Friday. That's correct. We got a lot of options expiring on Friday. That could be another reason we're pumping to then get dumped on Friday. So that, I mean, that the algos could navigate it in that direction. But that'll be something important on Friday to see as well. In almost 5 days is insane to say, like, wow, it's been a while. Well, I mean, dude, given he talks every day about any random topic, usually about something to do with the stock market and tariffs, it is pretty surprising the past week he hasn't. This was the heat map for today. Take a look at that, bro. Healthcare was the only thing red. Wow. Dude, that is a green day. Communications, consumer, industrial, financials, electronics, semis, everything, all the indices. Green on the day. While everything else, or while basically pharmaceuticals was red. What's up with the recent Jack Dorsey tweet? What did Jack Dorsey say? Hold on. Jack Dorsey. It looks like there's a Cash App debit card. Okay. Cool. I guess Steve would be excited about this. XYZ Cash App, or sorry, Square stock is up 3% on the day. I don't know, bro. I don't know if that's the most exciting thing, but that is a tweet by Dorsey. I feel like Cash App already had a debit card for a long time. I guess it's a new card that they introduced today. Don't think that's new. I've had one for 6 years. Yeah, that's got to be something. Is it like a customizable card? Is that the news? It's a hidden fee, customizable, instant discount debit card that keeps getting better. Okay. I don't know. This is not that interesting. I don't know if that's a bull case on Cash App, but if anyone uses the product, now you've got a debit card to be able to use. Steve will be on in about 15 minutes. Steve will be on, and then we'll get his thoughts on what's going on in the broader markets. Robina did post a new video with Vlad. He posted this last night. Also, I got to show you guys. Remember that kid that hacked Robinhood? That hacked the gaming thing? This kid right here. So he hacked the Bitcoin giveaway thing. And my take on it at the time was, I don't think Vlad's pissed off. I think he he admires, because Vlad's like a math computer guy, right? So he probably admires how they used AI to hack and win the $1,300 in Bitcoin. He met him yesterday, and Vlad said, hustle recognizes hustle. The kid was like, sorry, Vlad, have to return the money back in person. Hope we can be friends now. I love this. I freaking love this. Because most likely, yeah, he probably got hired. Vlad probably saw that video and he was like, find this kid and hire him. This is how you find A+ talent. People that do out-of-the-box stuff. And they, innovate and do some crazy stuff when it comes to this, when it comes to these types of social products and giveaway. And they posted the video, so they were able to get attention on them. Like, I just think the whole thing about this made a lot of sense. Some people are actually upset that he, like, quote unquote, stole the 1,300. And, like, yeah, I guess you could be upset about that. But the whole point of the way they did it, using LLMs and like the voice to AI, reading everything, because it was really hard to like just grok the question or GPT the question in real time. But if you had some custom built software then it ended up working out. So this is the video they put out yesterday about the gold event that's coming up. Again, I don't know what they're introducing at the event, but the theme is the Lost City, which is what they're showing right now.
On March 26th, we'll be hosting Robinhood Presents The Lost City of Gold. You see, for centuries, the greatest secrets were hidden away, available only to those who knew where to look. Not anymore. We'll be revealing the new Robinhood Gold, which includes financial opportunities that were once out of reach. So join us for some new products, some new and some familiar faces, and maybe a few surprises along the way. So we'll be live on X, YouTube, Facebook, and for the very first time in the Robinhood app and on Robinhood.com. So we'll see you there, 6:30 p.m. Pacific, 9:30 p.m. Eastern, March 26th. Thank you. On March 26th.
So we'll see. We'll see some new products that they are going to put out. He actually did tweet the what do you call it? The picture of the board, because people were looking at what he posted here. I don't know if this is a hint to the gold event, but Vlad said it's a map of it's a map. So maybe this has something to do with the lost city of gold. But there you go. It's going to be exciting. I'll be at the event. We'll see what they say. I think it'll be pretty cool. And we'll try to see if some of these new products can continue for the growth that they're having is now. Is Robinhood going to start having their own video platform? You know, I think Robinhood definitely wants to get into social media. And this is something I've been very optimistic about their betting platform. And like I've been defending the betting platform against everyone who thinks it's like the worst thing in the world. I would be bearish if Robinhood built a social media platform. I would be really bearish. I really would hate for them to build like an app for people to like talk about stocks inside of Robinhood or in some separate product. I think it would suck. I really think when companies try to build a social element to their core product, you have to deal with so many negative externalities. And most importantly, people go to social media to speak about products. They don't want to go to Robinhood to speak about stocks. They go to Twitter or YouTube, right? And I think trying to compete with the major social media behemoths is like always going to be a losing strategy. So if they actually did come out with like some type of social platform, I would not like it at all. I mean, like I would give it a chance to see if it works, but in reality, we've seen many of these fail time after time. So I would be bearish on that, but prediction markets, I don't think is the worst thing in the world. Or stock twits, yeah. And the problem with a lot of these social media platforms, they become very toxic because, again, you have to deal with the problem with free speech, right? People can say whatever they want. So when you're dealing with millions of people, like saying whatever they want to talk about, because let's say someone doesn't want to talk about stocks. Let's say they want to talk about some random topic inside of an app that's supposed to be about stocks. How do you moderate that? Like, what if someone says, I like vanilla ice cream? You're like, oh, that's not allowed because it has nothing to do with stocks. You know, it's like you get into this moderation, free speech, censorship type of problem. And I don't think Robinhood wants to deal with that. I don't think any company wants to deal with that. The only companies that should deal with that are the social media companies, and they have not done the best job over the past decade dealing with it. So I don't know. I don't know if that's the best route to go. Amit, any idea why I can't see the sport event contracts in my app? It should be in your app by tonight. They said in the next 48 hours, so that would be by the end of today. So if you update it, I think it'll load. It's all the way at the bottom if you scroll down. But if not, then either by tonight or tomorrow, it would be there. Yeah, the other biggest problem is dealing with bots, right? Like you don't want to deal with bots. Like I would be so against a social platform. Like I really would not like it. And I would vocally be critical that I don't think it's a good idea. But if they wanted to try it, I mean, I would support them trying it because companies should always try new things. I just think it would be really obvious that this is one of those things you want to avoid. This is one of those platforms that just probably would be less enticing than not. Boston Dynamics came out with a new video. I heard about this in the morning. I didn't get to pull it up. Real quick before we watch the Dynamics video, I believe that's on some robotic stuff. Let's get an update from NVIDIA, and then we'll keep going from there.
Welcome back. Jensen Huang unveiling his vision for physical AI at NVIDIA's GTC event, signaling that we might get helpful AI-powered robots in our lives sooner than we think. Deirdre Bosa brings us more in Tech Check. Deirdre?
Hey, Kelly. So physical AI was a big theme this week, and it's really the ultimate end market and test of AI's real world impact. That's why it matters. It's robotaxis, humanoid robots, warehouse automation. It also opens up a new AI battleground between the US and China with potentially far bigger implications. And that was really on display this week at GTC. Jensen Huang's enthusiasm about the potential in robotics, contrasting with China's lead in making cheap, functional robots and smart factories. Blue, the robot droid that was brought out on stage, it was cute and it certainly stole the show in a way, but it didn't actually do much other than follow directions. Compare that to the humanoid agent robots from Chinese startup Unitree that can do side flips and kung fu. Those robots, they're already commercialized, more affordable and accessible than the ones that Jensen Huang teased to, and even the ones that are still in development at Tesla or Boston Dynamics. Here in the US, NVIDIA, Jensen Huang, they've really just only begun introducing physical AI in earnest to a wider audience. First at CES earlier this year, now at GTC this week, focusing more on the underlying technologies. I hosted a panel at GTC yesterday on this very topic, and I asked my panelists what might be the ChatGPT moment for physical AI. Wendy Tan, CEO of Alphabet-owned robotics company Intrinsic, she suggested a scenario where a humanoid robot builds an IKEA bookshelf as a kind of breakthrough that would signal physical AI's readiness for the real world. And that, Kelly, would be a task that requires adapting to unstructured environments, handling uncertainty, executing complex multi-step tasks, all without human intervention. Feels simple unless you've ever
Amazing.
put together an IKEA cabinet.
Okay, so that goes to Boston Dynamics, which is what they put out here today about robots. Wow. Looks like a real human, bro. That's crazy. Okay, so now this is similar to the Unitree video that came out from China, and this is what they showed yesterday. So as you can see, these robots also are pretty aggressive. Dude, they're coming. The robots are officially here. They are coming, and they are going to be incredibly aggressive in terms of what we see. Now, the difference between what Boston Dynamics is showing and what like the Chinese robots are showing is the lack of doing meaningful work. Like the most important thing for these robots is, can they do meaningful work? Can they actually like be trained to do repetitive tasks and autonomous tasks inside of a factory, inside of your home, etc.? Because yeah, if a robot can jump around and stuff, like that's cool, but can it put a package from A to B and replace someone who works in a warehouse? That's what really is what a lot of these companies would be paying for in the first place. And that part, I think, is the hard part. And no one's necessarily easily done that yet. Bitcoin for 86. We did not get any crypto announcement from Trump yet. We'll see if we get it anytime soon. Bitcoin right here, 85.8. It really looks like this rumor. I don't think this is just Jay Powell being dovish. It does feel like there's more of a Bitcoin rumor that is out there. Trying to see if I can find anything here, but I don't really see any major sources right now on Bitcoin. If they announce it, it's probably going to be through Sachs, David Sachs, who is the crypto czar, but he has not said anything either on Bitcoin. What else do we have here? The China robots are fake. Well, the thing about the China robots also is like no one trusts them. Like I don't think any American company would want Chinese robots collecting proprietary data in their warehouses. And I wonder if the US goes as far, Robinhood back above 43 after hours, to ban them completely from showing up because from being able to procure those types of robots. Because right now they're not banned. Right now you can buy Chinese robots. It's just no companies want to deal with that risk. Which is another reason it should be bullish for Tesla, because they're American robots that they can sell to a Walmart or an Amazon or whatever. But it wouldn't, yeah, like, do you want a Chinese robot in your house? I don't know. What if Robinhood asked you to do a show on their platform? I would reject it, dude. I wouldn't do it. I like, whenever you take these types of deals with companies and go exclusive, it's not worth it. If you want to build media, you've got to go mass market. You've got to go for brand. And to go for brand, you have to be where the people are. And the people are on the big platforms like YouTube, X, etc. When you limit yourself to like because the only way that would work is if they pay you. So at that point, you're sacrificing audience distribution for money. And I don't know, I'm not at the stage where I would want to do that, nor do I think that would be cool. Because like growing on YouTube is like where like you have real momentum, right? But sticking on one platform because you get paid for that's just like completely stopping your growth. Also, how many people are going to log into Robinhood every day to watch the news? Like, I don't know, bro. That's not like, I'm so bearish on these companies trying to implement social features when their core product has nothing to do with social. It's just not like, also, how is Robinhood going to make money off that? Like advertising? Like, so you want ads and like, it's just, it would be a crappy experience from a UI perspective and a UX perspective. So I don't like, I'd rather have them sponsor some show on YouTube or something versus like pay a show to be done inside of the app. I don't know if that would be the best strategy right here. China and India have 2 billion people. They don't need the US markets. Yeah, that's also true. China has plenty of people to sell these robots to as well. Okay, let me see if Steve is free right now. He said around this time. Let's give him a call. If not, we might have to wait another 5 minutes. And let's see if we can get him onto the... He said he had a rant he wanted to go on, so you guys will get to hear his rant. Oh, he said he needs a couple minutes. Okay, so we will wait for the rant. Why not multi-legged robots like spiders or solid octopus shapes? Why not have them eyes that can register 360 views or human body has flaws? Yeah, that's fair. I don't think having a 360 version of robots that can look at multiple angles is bearish at all. Matt says they should sponsor cash flow. Dude, Matt, hold on. If Matt's in the chat, Matty Money, we are peer pressuring you to get onto the show. There's the StreamYard. Everyone spam Matt join the stream, and then we'll have Steve join in like 5 minutes. So we'll get Matt and Steve on. Try to get their thoughts on the market. If you're free, Matt. If you're not free, no worries. But if you're free, you can hop on. We'll see if Matt has any rants that he's been waiting to show. How is TJ? We haven't had him on in a while. Yeah, TJ, again, he's on a different platform with Tasty Trade. He's trying to get used to that. I think once he officially gets used to it, he'll come on to the show and we'll do our wheeling segment. But again, he's been transitioning all of his trades onto Tasty Trade and trying to navigate that because he's off of Robinhood now. So we're going to have to see eventually how comfortable he is to show that to everyone. Matt says he's at the office. All right. Matt says he's at the office. We need to call his boss and tell him to give him a break. To let him, yeah, Matt, why don't you care about us? Exactly what Jeremy says. Yeah, this is another, Benny's comment is facts, bro. Matt's a multimillionaire. He needs to leave the office, dude. Dude, Matt needs to retire and just go full-time investing. We know he can do it. He's choosing not to do it yet, but we know he definitely can do it. Why did TJ leave Hood? I think there were some personal reasons. Honestly, I don't even understand the full story, but there was some stuff that he just got annoyed with. I think the broader thesis is he sells like thousands and thousands of option contracts a year. And to Tasty Trade's credit, they're a way better platform for selling options. Their UI, in my opinion, is like just not that attractive. It's hard to navigate, but the actual selling of the contracts, it's better than Hood. Better fills. You can sell many at a time. On Robinhood, you can only sell like 200. So for his exact needs, it actually makes sense. But oh, there he is. Hold on, he's there in the chat, Mr. TJ. We need you back on the channel. Everyone's waiting for you to be on. But yeah, I was saying in terms of his needs for option selling, it seems like Tasty Trade is way better than Robinhood, even if Robinhood's UI is easier to navigate. But TJ, we got to get you on the channel to talk about how you're doing with wheeling on Tasty Trade. And then in general, how the hell you're navigating this market with wheeling. He said he's working out right now. All right, TJ, on Friday, you got to join. We got to do our segment this Friday if you can't join right now. Amit, did you add more NVIDIA and Tesla today? No, I did not. I didn't add anything. I added a couple Robinhood spreads at like 40 today, but that's it. I had like 15 of them. But outside of that, nothing else. Say TJ 3 times and he shows up. Yo, TJ, I saw your tweet the other day about doing OMAD or intermittent fasting. I can't agree with you more, bro. I've been doing some more research on fasting as well. I think there's so many benefits to fasting, like just so many different ways it can clear out and your gut, make you more mentally focused, etc. And no one should start fasting immediately if they've never done it before, but intermittent, OMAD, and then working up to being able to fast, 1000%, I think, is not a bad strategy. Obviously, it helps with weight loss as well, but there's a lot of regular mental benefits to doing that. It's better than Ozempic, in my opinion. It's better than Ozempic. Yeah, electrolytes. That's another thing I've been looking. Yeah, you've really got to do electrolytes, especially electrolyte powder, more than just like Gatorade if you're doing 72 hours. TJ says, I traded my buddy's account live on my account and then they slapped my hand with a ruler. Yeah, that's the other thing that went wrong with TJ and Hood. It's like you're technically not supposed to be trading other people's accounts. They're like, you're not supposed to log into people's shit. And if they catch you, they like legally have to take it down. You know, I was told by that from a Robinhood employee like a year ago. They were like, yo, I know sometimes you manage your mom's account, your dad's account, you might go into their logins, but like don't ever post about it publicly because you're not really supposed to be legally logging into other people's accounts. And so sometimes, their algorithms can go off and that can also trigger them to have to do stuff like that. Why don't you stream on X as well? Because X lies about how many people are watching live. X will tell you have like 10,000 people watching live and it's like, it's you don't. And so their live function is like really messed up from an analytical perspective. And then it like ruins like how you're navigating the stream because you don't have the right analytics. And all you have to do is fix the amount of people watching live and it would stream on X. But you can't really know what your analytics are like if they're lying to you. And like, yeah. Like they said 180,000 people were watching AIPCon. As much as I think AIPCon is amazing for Palantir, I don't think 180,000 people were watching it live, right? But it's just like, it's nonsense. It's like not real. So unless you can trust the platform, it's really hard to stream to it to be able to use it. And it's not even just the bots. It's that they count an impression of the live stream as a live viewer, not someone who's actively listening live. Like if you see this YouTube thumbnail of my live stream in your stream, you're not live watching it. So YouTube's not going to count you as a live viewer. But on X, if you even see it in your feed, boom, you're a live viewer. And that makes no sense. And so I just hate how they count those numbers. And it usually ends up never working out too well. Counting an impression as a viewer is insane. Yeah, dude. I really learned this a year ago when I was listening to Costco's earnings call. And they said 2,500 people were with me listening to Costco. Like, look, I know Costco is important, but 2,500 people I don't think care about Costco. Because YouTube had like 200 people. That's when I was like, oh, this is like completely fake. And you just don't really want to trust it if it's not. Okay, let's get a little bit more coverage. Oh, we have Adobe CEO. Interesting. I've been a bit bearish on Adobe. He's live right now. Let's hear what he has to say about AI. And then we'll keep going from there. The Trump crypto update is not out. Trump has not said anything about crypto, even though the headline is that we will get some announcements soon for what he has to say.
Having us back here at Adobe Summit. Break down these latest announcements for me, particularly when it comes to experience and these agents being orchestrated. How's that going to change the way customers are experiencing the business process and tailoring things for their audience?
Well, first, welcome to Adobe Summit, John. It's great to have you here. And, it is the largest marketing and creativity event. And we use it as a catalyst to make a whole bunch of announcements. The announcements on the product innovation side have everything to do with an extension of what we've already been building with artificial intelligence. We talked about how in all of our marketing products, you can have assistants. And the next step is agents, which is they can now, whether you're trying to optimize a marketing campaign, whether you're trying to make sure that the website is performing well for customers, how do you roll up all of this functionality into agents? And the way I like to describe agents are, at the end of the day, agents understand how to do reasoning. They're performing tasks to achieve a business outcome. And so we announced a series of agents that will work, to help marketers accomplish their tasks faster.
Is that going to result in fewer seats and lower monetization, or is it going to result in higher usage and higher monetization?
I believe the latter. All marketers want to create campaigns with greater agility. They want to have geographic variations. We talk about this theme of personalization for all. And I think the era of AI is really accelerating that. Over the last 5 years, we've built the ability for people to truly personalize an experience for you, John. And now you have to create all of that content that makes it really clear that they understand you, they understand their likes. And so I think this is coming together. And at the end of the day, you still need that human ingenuity and the creativity to create the campaign. So I think this will accelerate usage.
In a way, what's old is new, it seems. Personalization is something that we're talking about on the web a decade plus ago. But with AI, it takes on a different character. I think an example that you guys gave is something like a hotel can tell whether people are more likely to book when there's a beach in the background or there's something else in the background, down to the very image asset that's there, and then make changes to optimize. How far away from that are we? And what's that worth to a customer? How much more are they going to pay for the ability to do that?
Well, John, you're absolutely right. The product that you're referring to is something that we call brand concierge. And so think of it. To your point, when websites came out and they became digital, they still didn't know everything about you, and you couldn't have a conversational interface. So now, if you can actually have a conversational interface, Marriott was presenting, or Delta Airlines, they've announced also that they are leveraging this technology to create a concierge. They can just have a conversation with you and say, John, where would you like to go? Where would you like to stay? And then by having, to your point, the right images in the background, they can make sure that they're serving you based on where you say you want to go. And so we think this will accelerate a customer's affinity and loyalty for interacting with a particular brand. And I think at the end of the day, the customer benefits because they get the experience that they want, and the enterprise benefits because they're able to quickly service the customer.
Are you guys buying it? Does it make sense? I feel like it's very surface level analysis around conversational AI. I don't know if it really makes Adobe one of the core AI players.
Very interesting level of openness that you seem to have with this technology. You'll be able to call on Adobe resources through a Microsoft Copilot. You'll be able to access other models, image creation, AI models, Runway, VO, for example, through Adobe Premiere, through Photoshop. Why is that a good thing? Because some people might say, well, don't you want to own the whole agent experience and have the best agent? Don't you want your AI model to be the only one that customers are using?
Well, first, if you take a step back and think about Adobe, we have always benefited by being open. PDF was an open standard from day one, which I think contributed to the incredible success. We have trillions of PDFs out there. Photoshop benefited by allowing a plug-in architecture where people could say, oh my God, Photoshop is this platform through which I want to do image editing. Let me add additional functionality. So play that out now in the era of AI. First, as it relates to agents, if agents are intended to mimic things that people do and to automate tasks, if they can't talk to other tasks or can't talk to other people, the whole purpose of having an agent is actually defeated, right? I mean, you want an agent to do something on your behalf, but it can be isolated in itself. And so to your point about Microsoft, if Microsoft Outlook is the dashboard that you use in order to perform tasks, so if you're in a Teams meeting in Microsoft and you want to create a campaign or discuss a campaign, we want that campaign agent to be embedded in the experience that you're using. And so openness is really the case. And it's the same thing on the Photoshop. I mean, when you talk about AI and all these models that are emerging, as you know, Adobe has its Firefly model, but Google has an Imagen and VO2 model. OpenAI has a Sora model. There's Runway, there's Flux. And so each one of them will have a different personality. I mean, as you know, AI models hallucinate. And so they're all going to hallucinate a little different. And if people are trying to do ideation or creativity, allowing that plethora of models to work benefits somebody who's using Photoshop because they have all these creative ideas and then they can edit it down within Photoshop to accomplish. So openness has always been a key tenet of our strategy, and we think that it benefits customers and eventually creates more stable platforms. We'll see.
Like, again, he's not wrong on anything he's saying here when it comes to the ability for Adobe to be able to then upsell and offer products and services that primarily are using generative AI. The problem is, I think other people are doing that, like Google, like Canva, like Figma, like OpenAI with Sora to an extent. And so that's where I get a little scared about the Adobe brand being the core brand of AI. 455, the stock was at on March 12th, all the way down to 374. Now right back to 387. I don't know. Now, again, maybe I'm underestimating the power of their brand too much. I mean, people that use Adobe have used it for like decades. So maybe it's just something people will get upsold. But I feel like the broader vision of getting more and more of the world to use their version of generative AI over anyone else's model, like it kind of reminds me of this whole LLMs are commodities. Like picture image LLMs are also, to an extent, commodities, right? Because if everyone can just type in a query, then everyone can use it. I don't know. Adobe's a hard buy for me, dude. It's really hard to get excited about them, especially what's their multiple? Yeah, 25 times. I mean, they're growing like 8%. Got Google for 20 times, growing, 14%. Just feel like there's some better options out there. Hood up after hours, 43.10. A Bitcoin still at 85.5, not giving away 85. And then NVIDIA right here, slightly down after hours. Tesla at 236. The Tim Waltz video that came out today where he was basically saying it's good that Tesla stock is down could not have come out on a worse day because Tesla mooned today. Maybe tomorrow it'll look like a better video, but some people are saying that marked the bottom for Tesla. For Tim Waltz to be as bearish as he was, maybe. But we've definitely seen Tesla get a little bit of momentum here today. Didn't Steve Jobs hate Adobe? I think it was because of flash instability. Yes, I think that's correct. Steve Jobs was not a fan of Adobe. He always thought it wasn't like heavily focused on the user. And there were so many problems initially with the iPhone showing videos on Adobe because of needing flash until Apple created their own native video architecture. But I don't think Steve Jobs was really a fan for it. Amit, what are your thoughts on Grab and what are you expecting from them next quarter? I expect them to continue to show really good growth like they have been. I think they were massively sandbagging guidance. So I think they're going to guide way better than expected into Q2. EBITDA should get closer to 500 million versus 450. And maybe they end up buying their biggest competitor by Q2. I kind of, or by Q1. I would doubt it. I would say really until September, October, we're not going to get a real acquisition unless they make it quick. But I think it's going to take some time. But if they can do that, then I think that would be bullish. All right, let's give Steve one more call and see if he can show up. If not, then he might just be inundated with meetings today. So let's see. He did tell me that he wants to call in, but he has meetings. If not, then we will have to wait till tomorrow to get his rant that he wanted to go on. Someone said, is Palantir doing a buyback? Palantir's already authorized $1 billion buyback, but they haven't spent a lot of it. I think they've spent like 100 million out of that billion, maybe a little bit less than that. So I don't think they've spent a ton of that money, at least yet. All right, let's see. Let's see. We either get him or we're going to have to wait till tomorrow. He's in the middle of road rage somewhere. Yes, this is also probably true. He called me a couple hours ago and I could hear the honking in the back. I'm like, dude, this guy is aggressive when he drives. Yeah, I don't think. Yeah, he's not making it today. He just texted me, stuck in meetings. All right, we're gonna have to wait till tomorrow to get his rant. I'll just tell you guys, it was gonna be on Tim Waltz. He was so pissed off when he saw that video today. He was just mad that like the dude wants Tesla to go down. So that was gonna be his rant, but we'll hear from him tomorrow. 64 million. Okay, that's what I thought. Yeah, so they haven't even crossed 10% of their buyback. And you know, the reason for that, I think, is because the stock ran like crazy in 2024. If we had normalized around $30, $35, even 40, I think Palantir would have got more excited. But we ran straight up to 100 in less than a year. And so it kind of is not easy to buy back your stock when it's up 10% every month, right? So it makes sense. Steve thinks Tesla's going to go down. Yes, Steve thinks below 200 is when you see an attractive price on Tesla. So he's not buying this Tesla dip. Any chance you get Karp on the channel? I would love to, but Dr. Karp is a bit busy running Palantir. So I don't think he's going to be able to come on the channel anytime soon. He's a little busy running Palantir, but hopefully one day we can get him on the channel. Jack Dorsey said, I love Tesla. He quote tweeted Tesla. Tesla said, make things people love. You know, and for all the hate that Tesla's getting in terms of the brand image, they are getting a decent amount of love from the community. I've actually seen a lot of people say, I'm buying a Tesla, not even because I like EVs, but just because I want to, you know, support Elon and this brand. Now, how much of that support is going to lead to Q1 sales actually being better than expected? I don't know. And I'm a bit skeptical on that. But we'll see. I mean, maybe the MAGA base is going to get excited for it now that Trump's kind of endorsed it. Maybe people are going to want to support because they're just upset at what they're seeing politically. But we're going to find out in April. By the way, Boeing, nice recovery here. 162 to 175, up 7% today. I think we had a headline on Boeing that got the market excited. There was no earnings today. Oh, they increased guidance. Wow. They gave a new upbeat on their outlook. They increased free cash flow guidance. Well, there you go. That'll do it. They expect Q1 profit to have a one-time expense of about 150 million. Q1 revenue will be seasonally lighter. They said due to tariffs, we do worry about the availability of parts, and we are slightly increasing our free cash flow guidance for Q1. There you go. That'll do it for Boeing. Jason likes this stock as well. I know Mickey in the chat likes this one, but Jason's also a fan of this one right now. Well, yeah, Boeing's increasing their free cash flow guidance, not their revenue guidance. So maybe they're just becoming more operationally efficient to be able to get those margins up, because it doesn't look like they're increasing their actual top line revenue growth number. But that was decent news for Boeing. Dude, Boeing's been in the gutter for like the past couple of weeks too. So for them to get that piece of news, that is not bad. Bitcoin right here, 85.4. NVIDIA 117. Tesla 235 after hours right now. Let's see if we have any other headlines. We don't have the Trump headline yet. I don't know if we're going to get that. around crypto, but as of now, nothing. The Archer, so the interviews I'm uploading today from AIPCon are Archer, Walgreens, and Databricks. Or sorry, not Walgreens, Wendy's. Archer, Wendy's, Databricks. So that'll be out in like an hour or like 2 hours. And I think people will enjoy that. I know the Archer one everyone cares about. But those interviews from AIPCon will be out. Celsius up half after hours as well, up about 0.25%. Warren, thank you for the super chat. Which stock do you think will be the main driver for the market in 2025? It was NVIDIA in 2024. You know, it's a good question. I honestly don't know because I don't know if we're in a growth year or a value year. If it's a growth year, I feel like NVIDIA, Palantir, Tesla, those names should lead the way. But we've got a lot of uncertainty and lack of cooperation when it comes to rate cuts, at least in the short term, to be able to get to that conclusion. If it genuinely is a value year and NVIDIA is red for the year, then yeah, your Berkshires, your Verizons, your Pepsis, your Nikes, those should do better. I don't know, dude. I find it hard to believe Verizon's going to be where you want it to be in December versus NVIDIA or versus Amazon, you know, or any of the Mag 7 for that matter, outside of Tesla, because maybe Tesla just has a really crappy year. But even then, I feel like it's better to bet Tesla would have a better year than Verizon. I mean, Tesla had basically a crappy year until September last year. Like the first 9 months of the year, Tesla was one of the worst performing stocks in the S&P 500. And then boom, everything turned around in October. And they were one of the best performing stocks, closing in on like 70% for the year. So I think we got a long way to go towards the end of the year. The headline was that he's speaking tomorrow. I mean, look, if that's the headline, I guess it is, but the rumors were it was going to be a lot more serious than just that. What's your opinion on Google versus Meta over the next few years? I like Meta's execution better, but I think Google's cheaper. Gun to my head, I don't know, dude. I think it's hard. What do you guys, Google or Meta? What would you guys pick? I feel like gun to my head, I would still pick Meta, but I cringe when saying that because Google's valuation is ridiculous and it's discounting a lot of their initiatives. But I just think I just think Meta's core advertising product is less at risk than Google's search product with LLMs. Even if LLMs are a small risk, they are still a risk. Whereas Meta, I don't think has any risk from LLMs. If anything, that just hypercharges their revenue stream. Let me make a poll. Let me see what you guys think. I feel like I'd pick Meta, but it's I don't know how you go wrong on either. Meta or Google for the rest of the year. Let's see what people think. I feel like Meta's going to win. But you guys might go with Google. They also have Sundar. Yeah. But Sundar's, I mean, look, he's paying $32 billion in cash, bro. Like, he's making some big moves. This is the biggest acquisition Google's ever done in their life. I think the one before this was like 10 billion. So it's 3x higher. And it seems like they are not slowing down on trying to compound on this momentum, especially in the enterprise. 56% of you say Google. All right. Some more Googs than Meta. I do own Google. I do. It's not a ton of Google, but I do own Google. I don't own Airbnb. That stock, dude, like, yeah, the Peter Lynch model of like own what you use. Airbnb has just, it's down. Dude, this stock has been a disaster, like an absolute disaster. It's down 10% over 5 years. Year to date, it's down 9% or 4%. Past 6 months is down 2%. Like, I think they peaked at what, 150? Yeah, 160. They peaked when everything was peaking in February. That's the only time they actually got some momentum, but they've never been able to sustain it. Amazing product, even though I know a lot of people still hate Airbnb and they'd rather use a hotel. But stock has sucked, bro. Absolutely sucked. Do you like Elf? I don't love their China exposure, but I love their management. Also, I think that makeup stocks might be getting a bid just on the kind of general premise of a makeup recession. At least that's why I think Elf was moving. Elf also had this Taylor Swift partnership, which helped them. I just like, again, I've been on this theme of this, like any stock outside of the Mag 7, you got to compare to the Mag 7. So Elf versus NVIDIA or Google at these levels, it's really hard to get excited about Elf when you look at how fast Google and NVIDIA are growing and how cheap their multiple is. Unless it's like a recession-proof stock, which maybe Elf is with makeup. But a lot of these names, they're just put up to a high standard when NVIDIA and Google are this cheap. Affirm 9% on the day as well. HIMS also a nice monster day, up 8%. It's close to going below 30 today. But that one's up 8% right now. Why do you use Airbnbs over hotels? I think so when I mean, like for me, when I go to California, that's what is the hardest part about hotels. They're just way too expensive, like really, really expensive. So when I went to interview Brett, CEO Figure, 4 weeks ago, like it was easier to get a week in an Airbnb versus a week in a hotel from a price perspective. Like some hotels, dude, are like $400 or $500 a day. And then you could look at the hotels that are shittier and that are like $120 a day. And I did one of those a year ago and it was shitty. It was just not worth it. I was like, you know what? I'd rather have paid for an Airbnb, maybe another $20, $30, but this hotel was just not it. So yeah, I feel like in certain, like in Texas, I don't know if it would be the same dynamic, but at least in California, it's a bit cheaper sometimes with Airbnbs. I'm exclusively travel using an Airbnb over a hotel unless I'm staying at a nice resort. Yeah, you also get new experiences with an Airbnb. You get a bit more privacy. You have a lot more space to do what you want to do. You have your own location, whereas in a hotel, it's just one room. But granted, in a hotel, you have everything provided for you. The Airbnb I stayed at recently, though, was great. Like, dude, I walked into the room and there were freaking snacks on the bed. There's like chips and water bottles. And I was like, wow, this is like, I've never had this type of experience at Airbnb before. So sometimes you just get really nice hosts. They have what do you call that thing? The coffee thing? The Kruger? The Keurig. The Keurig. Not the Kruger. They had the Keurig, bro. They had the Keurig. It was perfect. It was absolutely perfect. So there you go. Why did I say Kruger, bro? It's a Keurig. I need to buy a Keurig, dude. I need to get one of these. Yeah, no, the one problem is they didn't have heat, bro. The one thing I was so happy about in this latest Airbnb I stayed in, there was freaking heat. And there was an electronic heat mover, whatever you call it. Like there was a dial where you could move it to like 75, 78 Fahrenheit, and you could actually control the temperature. And the one before that, it was like this old heater that like you pushed all the way up, but like it never actually worked. And so that a thermostat. Dude, what did I just say? Electronic heat dialer. What did I say? Dude, there's some words that just like escape the fathom of my imagination when I'm trying to make a point. Thermostat. Yes, that's. Dude, I would, for the life of me, not have figured out the word was thermostat. Dude, I could have been sitting and thinking for like the past 2 minutes until you guys helped me, and I would not have come up with that word. Thermostat. Electronic heat Kruger, exactly. That was like the other day when I was trying to talk about meditation music, and I was like, oh, there's this like person talking in the background with the music. It's called guided meditation. It's like I could not even think of that word. You're crazy putting it to 75, dude. I put it to 80. I was sick that week. I was like, let's get it freaking hot, bro. I do not want to be cold. Not at all. But yeah, thermostat. That's the just like mocktails. Yeah. Dude, everything's a mocktail to me. Everything's a mocktail. You guys say mocktails don't have alcohol? Okay. I'll drink some water. That's a mocktail. Doesn't have alcohol, right? Boom. That's my mocktail. And there you go. If this was a trivia show, I think I was first on thermostat. I'll take my gift. Dude, we are definitely setting up this trivia show. I really like this idea. I want to do stock market trivia. Maybe we'll make an April plan. Let me get it set up over the next couple of weeks, and then let's do it. I think it'll be super fun. Super, super, super fun. Yeah, I looked into Kahoot. There's a bunch of other platforms I'm looking at as well. But Kahoot is one that could do it. Woody Trades, thanks for the $10 super chat. Want your honest review. Don't immediately discount this based on price, but look at the business. ZOMDF, priced at 1 price of sales and 2x cash as market cap, growing revenue. Torn if I should buy. Is this an OTC stock? It is. Yeah, dude. I mean, I just don't know. For OTC, it's always a risk, right? So it might look super cheap, which, I mean, yeah, a price of sales of 1 and double the cash they have on the balance sheet versus the market cap. I mean, just based off that alone, I would like look at it, but it's OTC, so you just never know. Wait, I know this company, Zomedica. No, this was Zomedica. This was a 2021 meme stock. Zomedica. Yeah, I would stay away from this one. This was an animal health company. They used to be on the NASDAQ back in 2021. Their ticker symbol was ZOM, if I'm not wrong. But they got delisted because, like, yeah, like some of you guys remember that one, right? ZOM? That was a meme stock in 2021. That was pumping. Yeah, I don't know, dude. I mean, maybe there's a thesis there, but usually when they're OTC, you got to be really lucky, along with have due diligence to see if it works. Oh, they just delisted. Okay, that makes sense. I haven't heard of them in years, bro. But as soon as I saw what they do, animal health, I was like, oh, I remember that company. That was 2021. Yeah, there's just so many better opportunities out there. So many. Even if these OTC ones are cheap. Was Quantum green today? No. Wow. Quantum was red on a green day. That's weird. Rigetti, D-Wave, all down on a green day. Huh. IONQ is the only one that was up. Bitcoin still at 85. That is weird. You would think the spec names would get some love today with QT slowing down. But that did not happen. OTC is over the counter. So it's like stocks that don't meet the requirements to be listed on the NASDAQ, the New York Stock Exchange. How do you even buy OTC stocks? Like, it's not even just penny stocks. It's like pink sheet stocks. How do you buy, like, what platform allows you to buy OTC stocks? Some of them are on Schwab, right? Or IBKR. They allow you. Yeah, Schwab allows them and IBKR allows them. I think Fidelity might allow them. Schwab definitely does. Robinhood does not. You can't buy OTC stocks in Robinhood. So they don't allow that. Pink sheets is a term that they used for stocks back in the 70s and 80s for like these junk companies. But those usually trade OTC. Okay, Steve said he's calling in 5. I mean, we're still live, so we might as well just wait till Steve comes in. He said he was stuck in meetings, but now he's saying he's calling in 5. So we'll wait for him in 5 minutes. Rant incoming. We'll see if he unleashes his rant and if he keeps it going. Do you have Bitcoin in a minute? No, I don't have a ton of Bitcoin. Again, my main crypto exposure is Robinhood, but I am getting more excited to buy IBIT and sell calls against it. I've been trying to see when's the best time to just DCA into it. And I think, look, Bitcoin could drop to that 60K level that Tom Lee's been predicting, et cetera. But I feel like if there was any time to begin a DCA into IBIT and build like a Bitcoin position you can make income off of, I feel like now is not horrible. All right, he is calling in. Let's get Mr. Steve onto the show. Steve. The first thing we hear are sirens, bro.
It's the first thing you always hear.
Like, New York is insane, bro.
It's really not. It's a normal occurrence.
No, but this is why I can't move there, bro. Like, I don't want to hear sirens all day. Like,
I don't know what you're telling me.
It's not worth it. It's too much. Okay, so I already pre-amped up everyone to say that Steve has a rant. So I guess we'll get started with.
Let's not. Let's talk about Jay Powell.
Okay, let's talk about Jay Powell first. Yeah, no cut on rates. What do you think?
We knew that was going to happen.
That is true.
And he was very. I didn't hate the call. I don't even know what the markets did. I have been slammed, and I actually did the markets finish up or down today?
1% up.
Okay, so as I thought they would, so not 1%, but I figured they'd finish up. The only takeaway from the Fed conference, there's only one takeaway. He flat out said what is needed for a rate cut. He said inflation either needs to come down or unemployment needs to come up. Otherwise, they are perfectly happy keeping rates where they are.
Yeah.
He flat out said it. He told the administration and he told everybody what is going to be needed for the Fed to cut rates. And they are unchanged in their sentiment. Whether some people went up or down, the overall sentiment is unchanged since they revised upward in December.
Correct. But the one thing they said is that they're slowing down the pace of QT.
Yes.
And so I think that's why we pumped, because there's still going to be more liquidity in the system to get yields down, even if it's not by rate cuts.
Yeah, I mean, look, you can't just say, okay, CPI print dropped to 2.8% in 1 month. Powell needs more than 1 month to cut rates at this point. And unemployment's not high enough. I don't know that I hate this conference call, to be honest with you, or this press conference. I don't know that I hate it.
I don't think anyone hated it. I think the market loved it.
No, I think it's fair.
I think it was very fair. He dodged all the questions about tariffs that were trying to get a headline. He did say tariffs would create uncertainty. He did say tariffs inflation would be transitory, which was a little scary. But
a little weird,
but he's right, because in 2018 there was tariff inflation that ended up being transitory.
He doesn't have enough data to make a definitive answer.
Yeah, exactly.
So I am not mad at that.
Yeah, neither am I. Not at all. Okay, cool. So let's talk about GTC. Hell of an event. Did you buy more NVIDIA?
You know, I don't think you're bullish enough.
I guess you're the only mega bull in you and Dan Ives on NVIDIA.
I mean, I may be more bullish than Dan Ives at this point.
That's a hell of a statement.
If that's even possible.
Okay, so why are you that bullish?
I don't think people understand the opportunity. I don't think people understand that there's no reason to own 90% of the stocks in the market at this point.
Wow.
And that's a silly thing to say, but in all seriousness, why would you want to own my favorite company, Costco, over NVIDIA? Why would you want to own Walmart over NVIDIA? Why? You're getting NVIDIA. I don't know what the new numbers are, but at what, 20 times this year's earnings or 21 times this year's earnings and around 17 times?
About 25.
2027? No, it's not that high. For this year?
Yeah, it's at 27. Yeah.
Can't be.
That's what it is. At 117. It's at maybe yesterday it was at 23, but
go to Seeking Alpha, go to earnings estimates. It can't be.
You know, Seeking Alpha, I've noticed, has been wrong a lot of times on this. And it's messed me up when I'm looking at it. But earnings estimates, it says January 2026, 453.
Okay, and what's the forward PE?
25.
Is it really?
Yeah, 25.
That high? Okay, so what's 2 years out?
20.
Okay, so you're paying 20 times forward earnings.
Well, 2 years.
There's no reason to own anything else at this point.
So the only pushback against that is that, yes, the forward multiple looks cheap, but that's if NVIDIA will grow. What is the argument against that they won't grow 2 years out?
None of these companies are going to stop buying the new chips because of the amount of compute needed for reasoning models and everything else that we're going to be doing. Think about it like this. When robotics actually happens, thinking about the amount of reasoning you're going to need in the compute power for all these robots we're going to produce. I think that the ramp that I was saying for a long time of 18 to 24 months of build out, I think that just got expanded to minimum 4 to 5 years.
So you think it's going to not be cyclical for 2 years? It's going to be cyclical to 5 years.
I think it's going to be an ongoing build out for multiple years at this point, not 18 to 24 months. I just don't see how, if Microsoft doesn't slow down and they keep buying the new chips, I don't know how anybody else doesn't. It just, I don't see it. I think that we're also not taking into account the amount of processing power we're going to need for robotics and autonomous. When you look at the forward growth, NVIDIA is expected to grow its revenue from around 130 billion to 204 billion this year. And they have a 56% profit margin. Their EPS is expected to grow by over 50%. Even if they only have a 50% profit margin, they're still going to generate over 100 billion and have the EPS growth is more than almost any other company. So I just don't understand why people aren't as bullish as me.
Well, what's your theory on why?
I think people are worried about CapEx spend going down, but you can't worry about that until people actually say they're going to spend less. Not a single CEO of any of the companies that matter have come out and said they're spending less on chips. Not a single one.
No.
They all say they're not spending enough. They all are increasing their spend. And July is going to be the telltale because Microsoft ends its fiscal year in July. If Microsoft comes out over the top, get ready because it's going to be an all-out CapEx spend this time next year. You're going to get all upgraded numbers. I mean, the big four is spending an extra 120 billion this year. This doesn't end anytime soon. Not when Jensen is putting out these chips that are so much more superior than the previous version.
Do you think NVIDIA can rally if the market doesn't? Because I feel like it's tied to it at this point.
It's going to be hard because there's so many people are expecting so many things. But look, they bought back $40 billion worth of shares. If they keep buying back increased amount of shares, it's going to make the EPS numbers expand. They're going to eventually have to rally. I don't see that it can go down past 90 here. Like it can keep going down, but I think there's going to be a hard stop somewhere.
Yeah, I mean, again, if the growth estimates are what we think it is, when the stock price goes down, it actually does get cheaper, not like scarier. Because if they're going to put up that growth, you just have to be comfortable with it, unless you give them a PE of 7, which I don't think the market's going to give them that.
It's not, no, and that's not fair. You can't have NVIDIA trade as a tobacco company or a bank. Not with this level of growth.
Do you also think this could be the market thinking big tech this year is not supposed to lead, and the rotation is just what leads NVIDIA to be left?
We need to get. You're saying it to set me up, because you want me to say what I said to you last night. I know what you want. I'm going to give it to you. I think everybody needs to reclassify how they think about what stocks are recession-proof and what isn't.
Okay. Okay. I see what you're saying. So you're thinking NVIDIA is not recession-proof, or it is recession-proof?
No, I'm thinking that the old school way of thinking about what companies are recession-proof needs to go out the window. And we have to look at it as what is not going to get cut spending in hard times. Well, nobody's getting rid of Microsoft Office. Nobody's getting rid of Azure cloud hosting. Nobody's getting rid of Windows. Microsoft is recession-proof. You look at the balance sheet, you look at the amount of cash they have on it, you look at their free cash flow, you can't tell me they're not recession-proof. Way bigger balance sheet, way more cash flow than Costco, Target, Walmart, Coca-Cola, and Pepsi put together. That's why. Companies are not cutting their advertising budgets.
Yeah, but I
Advertising-
still think multiples compress in a recession.
Multiples can compress, but what is recession proof and what isn't, the logic needs to change. Because in a recession,
But if the definition is NVIDIA's recession proof, the answer is always yes, because it's NVIDIA. It's going to survive.
right, but that's not what I'm saying yet. What I'm saying is, if you have a family where both people work and one person loses their job, unfortunately, spending power goes down, most likely, if we have a wide recession, companies like Costco and Walmart are going to feel it. But Microsoft may not really feel it because you would need corporate spending to stop spending on essential services. Nobody's getting rid of E1, E3, and E5 licenses for employees unless they're going through a major rift. And on a true up, depending on how your contract is worded, you may be locked in for the rest of the year on that. Nobody's getting rid of Azure hosting. They're just things that people aren't getting rid of.
Yeah.
And when you look at the previous recessionary periods, big tech is growing through them.
I mean, look, I don't disagree that these companies are not going to do well in a recession, but I still think if we get a recession, NVIDIA is probably back below 100 easily.
It could be, but I don't think that their earnings get hurt because even, let's just say that the Atlanta Fed is correct. I mean, they already revised from negative 2.6 to negative 1.8. Let's say they are correct at 1.8 here, and you have the first quarter of negative GDP growth. Let's say you get another sequential quarter of negative GDP growth next quarter. I don't think that matters for NVIDIA because the largest companies in the world that are buying from NVIDIA are not losing cash flow because of that, and they're going to keep buying, and NVIDIA won't feel a thing in a recession.
Yeah. Oh, it's fair.
So whether the stock price goes down or not is indifferent than what their actual sales are going to be. And I'm not seeing any data that if we do get this quarter being negative and next quarter being negative, the CapEx spend stops.
So what are you selling to buy NVIDIA?
I'm considering selling SL Green. Like I go back and forth with it.
You already sold your SMCI, right?
No, I mean, I sold the shares and I sold the naked options. I still have my spreads, which I have to sell next week. So that'll be going into NVIDIA.
So you're thinking of selling SLG, which you've had for like 5 years now, right?
Not 5, maybe 2 or 2.5, something like that.
Huh. So what? Would NVIDIA become like, are you thinking of making it like the largest position? Or top 2, top 3?
It's going to take some work, but I wouldn't be opposed to it.
Yeah, I mean, like,
look, I think its fair value right now is 175 to 185. Quite honestly, I mean, if people are paying up for less growth with other companies that aren't as profitable, you can't convince me that NVIDIA is not worth $1.75 a share.
Yes, I mean, the best stat you've showed me is Costco's net profit margin is like 4%. NVIDIA's like 55%.
And people get excited. No, it's like 2%, and people get excited about that.
Yeah.
NVIDIA makes in 7 weeks what Costco makes in a year profitability. But the memberships.
It's juicy SaaS revenue for Costco. The memberships.
Memberships.
Okay, so now what are your thoughts on Tim Waltz wanting Tesla to go to zero?
I mean, look, I think it's an unfortunate situation when politics play this big of a role. And look, everybody can vote how they want to vote. Everybody's got their own opinion. I think it's a sad state when that impacts business. And this is an elected official that wants to
during the day
serve everybody. So I don't know. I think it's an unfortunate situation when anybody is betting against or wants to root for an American company that employs tens of thousands of Americans
No, but that's the part that surprised me. I was just like, it's not even political here. It's just like
It's not.
if you
It's
saw
just
any politician say they want an American company to fail for political reasons, which are American workers, hundreds of thousands of them employed by Tesla.
look, I have no problem with people criticizing Elon as a person. I criticize Elon as a person. You've heard me say many times, I am, as a shareholder of Tesla, I am unhappy with him being so public about what he is doing because I cannot measure and I have no idea what type of damage it's going to do to Tesla long term. So as a shareholder, I'm unhappy about that. And Tim Waltz is entitled to his opinion. That's what he believes. I just think it's not, I think it's unfortunate when anybody in this country roots against American companies that provide jobs for people across the country on both sides of the aisle. And I just wish politics would be taken out of business. I don't think there's a place for it.
In general, Tesla, you had a couple reports come out today saying that we bottomed. Cantor Fitzgerald upgraded us to 425. You still think below 200 is when you get excited?
I don't think we bottomed.
Why?
I don't think Q1 is going to be good.
Is that your only reason for why we haven't bottomed?
No, I mean, look, Q4 wasn't great. I don't think Q1 is going to be good. And I don't know how much harm he's doing to the brand right now. And if auto sales slow down and you don't get the Fed cutting to a point where it's going to be advantageous to actually take loans out to buy these cars, I don't know that autonomous and robotics is going to come out quick enough to stabilize the loss in profitability and revenue. And the only way that I see this actually bottoming without additional revenue lines is if he comes out with some massive statements and really gassing up autonomous and robotics. But operationally, I am not looking forward to the Q1 report.
Is there any argument around sentiment being bottomed, and that is enough of a reason to get excited about Tesla?
I think fundamentals are what's going to drive it at this point. And in order to change the sentiment, you're going to have something change in the numbers.
Yeah, I don't disagree with that. I mean, I'm in the same boat. I'm kind of trying to poke and see how you're thinking about this, but I agree. I think Q1's going to suck, dude. I don't think.
I don't think it's going to be good, and I'm opposed to the whole idea that robotaxis can be $1 trillion industry. I think that's ludicrous, and if they generate $100 billion from it, I'd be impressed. I don't think it's going to be what people think it's going to be, and they need to get the Optimus platform scaled as quickly as possible. That should be their sole focus.
Palantir's still holding 85. Tesla's holding 235. You sound relatively bullish about the dovishness we got from J Powell. So although you don't like these valuations, do you really think we end up getting that much lower if the markets stay even stagnant?
I don't think the markets need to go down for Tesla to go down. I think Tesla can go down on its own. And the same thing for Palantir. It's just love the company. I think AIPCon was just another amazing thing and showcased new partnerships, why they are on top of the game in software AI. And they really are on track to prove me correct about becoming the second most important company in software behind Microsoft. Now, that doesn't mean that the valuation makes sense. And I don't see how anybody would want to pay these multiples for Palantir's growth when you can pay a fraction of the multiple for more growth for NVIDIA. If Palantir does 40% revenue growth this year, it'll be an amazing year by anybody's standards. But you're paying a significantly larger multiple for Palantir's 40% than the 50-something percent that's baked in for NVIDIA.
Yeah.
So it makes it hard for me to understand why people want to go chase Palantir at these levels when you got NVIDIA sitting on the bargain rack.
Yeah, I mean, I was talking about this, but every stock that you buy right now, it's compared against not only NVIDIA, but Mag 7 names that have been decimated. But
Yeah, look at Alphabet.
Yeah, same one.
Look at Alphabet. Why would, and look at Amazon. Amazon's going to be the first $1 trillion revenue company. And by the time they get there in 2029, based on the estimates, they are probably going to be able to pull the lever back on CapEx a bit, and their free cash flow could be around 150 billion a year. I mean, it is going to be incredible what this company can do in the future.
Yeah, I agree. I agree. So is 2025 a Mag 7 accumulation year? You think that's the?
I think so. I mean, it is for me. I am shocked that people aren't as bullish. There's no, while we want the broader markets to flourish, they can still flourish without the Mag 7 going down. And I think people need to realize that the Mag 7 have the best balance sheets, generate the most profitability. That's not going to change. You're not going to see Broadcom overtake one of these companies with profitability. You're not going to see Eli Lilly or who's in the top 20. I mean, Costco's was in the top 20, but who are the other ones outside the top 10? Pepsi, Johnson & Johnson, Procter & Gamble. You're not going to see those companies generate more profitability than Mag 7 companies. Now, take Tesla out of it because they're not really Mag 7. Call it the Mag 6 at this point. You're not going to see those companies have bigger balance sheets or generate more profits.
Yeah, Oracle, Netflix, United Health, MasterCard, they're not going to put up those types of numbers. They're just not.
Think about it. Alphabet generated something like 70-something, in net income, they generated $100 billion. Microsoft and Apple both did over 90 billion, I think. None of those companies come close to that.
No, you're right. You are not wrong about that. Not at all.
So I think this is an accumulation for big tech because eventually they're going to get too cheap to ignore. And people seem to forget the amount of inflows every 2 weeks in retirement accounts that goes into ETFs and mutual funds from 401ks and pensions. The majority of that's going into Mag 7. And if you look at the top 10 holdings of the S&P, what is it, 27% the top 10 holdings?
Yeah.
Something like that. Same thing with total market funds. So you have forced buying every 2 weeks with these companies. The lion's share is getting put into these companies. And they're at the end of the day, I define the best companies are the ones that are the most profitable. And it happens to be big tech.
Okay, I want to talk about XRP, but before I need to ask you a off-topic question. So I'm just curious to see if you can answer this. You know when you're in a hotel and you need to like adjust the temperature and you want to make it like hotter or colder, right? Like what's the thing you call that you use to adjust the temperature?
Thermostat.
Okay, just wanted to know if you knew what that was called. Anyway, XRP. So are we bullish?
Wait, why did you even ask that?
Because I couldn't think of the word thermostat, and everyone I called it the heat going upper thingy, and and then I got like 50 comments of like it's called a fucking thermostat. I was like, oh shit, that is what it's called. It's a thermostat. So,
yes, that's what it's called.
Yeah, I had a moment there. So I was hoping my friend would also not know exactly what the heat dial thing is called. But you got it pretty quick. So also do you know what a mocktail is?
A mocktail?
Yeah.
You know what a Molotov cocktail is?
So does a mocktail have alcohol in it?
I have no idea. I don't even know what it is.
Okay, apparently it doesn't. And I was at AIPCon's party and I thought I was getting drunk off a mocktail. But then everyone told me the day after in the morning, they're like, dude, a mocktail doesn't have alcohol in it. And I was like, oh. So I got drunk off of a placebo effect then.
That's not a thing, but okay.
Yeah, I thought it had alcohol, but it is what it is. I'm happy you got thermostat because it proved that I'm the only one in the world who didn't know what the hell that stupid word was. Anyway, XRP. So should we buy XRP now? Is it time? Are we bullish?
I don't know what you should do.
Are you buying XRP right now?
No, I already own it.
See, I hate this about you so much. I like you bought your load, you bought your bag at what 20 cents, and now you're never buying again.
Yeah, I mean my average price I think is 19 cents.
So what's the thing that happened with the court case today? Why is it like so exciting?
Can you just get Brad Garlinghouse on your show and interview him?
Can you connect me with this guy? Because
I don't know Garlinghouse.
I don't know him either.
You know, you're interviewing all these CEOs. Get him on.
Is he really a CEO? Does he really run?
Yeah, he's a CEO of Ripple. Yes.
Is Ripple even really a thing though? Like,
it's one of the largest private companies.
Okay, well, why is XRP mooning? Were they going to get investigated and it's not anymore? Is that it?
It's been in a lawsuit with SEC for the past 5 years.
About what?
Whether it's a security or not, Gensler went after them, and this was the staple case that the SEC was making against the crypto industry. And Garlinghouse and his team fought it tooth and nail. You had John Deedon, an independent lawyer, get all involved in this. I mean, this was a very big thing for years and years. And this is now solidifying an industry going forward. Like, this was huge. Absolutely huge, to the point where this was taken off exchanges. This was frozen assets in some states. In New York, your XRP on exchanges still showed up, but you couldn't buy it, you couldn't sell it. It was frozen. I mean, this was really big for a long time.
So when you got the news this morning, I imagine you were pretty happy, right?
I was very happy, yes.
All right. Well, look, if this thing keeps going to the moon, you're set for life. So
this is some of the most potential out of any technology out there, because the SWIFT, I've told you this many times, the SWIFT banking network is archaic. If you send money cross-border to Japan, South Korea, somewhere overseas on a traditional wire, it is going through several intermediary banks, and there are additional fees with every bank associated. This is 3 seconds. The fee is basically nothing. This is huge liquidity, and it truly facilitates cross-border payments. And it was designed for financial institutions, and it was designed to fix flaws that the SWIFT banking network has. The amount of banks and institutions that are partnered with Ripple for XRP is in the hundreds. There are sovereign nations that are approving this, that are working with Ripple. There are banks such as, I believe, the Bank of England. There's a lot of partners with this. And if this becomes widespread adoption, you're going to wish that you had some in an account somewhere. You're going to see spot ETFs on it. There's going to be a lot of stuff coming forward on this.
all right, that's fair. It's at 250. It might not be the best price in your opinion, but it also long term could be a great price.
Well, I'm looking at this 5 to 10 years down the road. This could be incredible. This could be, I mean, look, take value. I don't know how you evaluate this stuff. I don't think Bitcoin should be worth anything because it doesn't have utility, in my opinion. But obviously it is. Now, you look at XRP that actually has real world utility, and now it looks like you're going to have the backing of the US government, and you're in a situation where it is going to have paved streets for implementation, and banks can actually use it. If Bank of America, JP Morgan, or if these banks come out and start using this technology, and this becomes a standard, what is that worth?
Yeah, but I think you're not commenting on the massive dilution that they've done, the fact that they don't buy any of their own coins, the insiders don't actually own a decent amount of it.
Right. But every transaction, a little bit of it burns. Just a little bit. Now, when you get to a point where it's mass adoption, eventually you'll see it not have a crazy float anymore.
Yeah, but mass
It takes
adoption
a
is
lot of
how
time.
many people have to be using it for it to be mass adoption?
Don't think people. Doesn't matter about people. Think about financial institutions. Think about business.
Okay, so what? It has to be, what, 10% of all financial institutions?
I don't know. But this is something that can really scale. And you look at what the cross-border, how much money is sent cross-border every day, and you look at the SWIFT banking network, if this disrupts it, the sky is the limit on this.
Well, I'll tell you, there's a hell of a community on XRP. There's a lot of
You have
people.
you have no idea about the XRP army.
Well, dude, no. Even in the morning open, there was like 50 people that like talk about XRP, talk about XRP. 'Cause, like, there are people that really do believe.
The XRP army is probably bigger than the Tesla.
I would say it would rival the Tesla community in size. I agree.
It's incredible how big it is and how devoted they are. It's actually incredible.
Yeah, I mean, they are devoted. Absolutely.
Yes.
to this thing. You know,
Look, I think that there's a few crypto projects that really add a lot of value. XRP is one of them. I like Solana. I don't own it, but I think it's a very good technology. And then I happen to think the smart contract concept is great. I just don't think it works in practice. It only works in theory. So that's why I'm not bullish on Cardano or Ethereum.
yeah.
I'm just looking at utility and what can be used in the real world. And Solana and XRP are real world utility. That's why I think that they're both going to do well, especially the way that it looks like our government is going to move.
Okay, last question for you. You put out an article on Qualcomm yesterday. What's the quick pitch on why you like the stock?
You should go to it and look at the cash flow chart.
Okay, let's pull that up. Ops, capex, free cash flow, buybacks.
They keep increasing cash, big free cash flow, great margins. They buy back a ton of stock. They pay a good dividend. And I think people are looking at next year minimal growth, and they're not thinking about the opportunity for connectivity in the Internet of Things because it's been talked about so much and it's been a dud. But when you get to robotics and autonomous, their chipsets are going to be needed for connectivity.
Do they compete with NVIDIA per se?
No,
Okay.
no. And their chips are going to probably be the biggest chips for 6G when that ramp happens. Because they're huge with 5G. They're arguably the number one chipset for 5G through their CDMA technology. And when you think about the difference between 4G to 5G and how long 5G has been out, we haven't even seen the first 6Gs other than routers. So this company has a lot of movement going forward, and I don't think we're really ready for the level of connectivity that's going to be needed in all the upcoming technology. And that's why NVIDIA, Qualcomm, these companies, I think, have a long runway.
Do you like it more than NVIDIA valuation-wise or no?
No.
Okay.
No, because it doesn't have the growth NVIDIA does. I don't think you can I don't even like Alphabet's valuation better than NVIDIA at this point, and it's a cheaper valuation. Only reason I say that is because it doesn't have nearly as much growth. I think they're both drastically undervalued. But if you're looking at it for what could be the best bang for the buck, I don't see why you wouldn't buy NVIDIA over other things. Like people buying Palantir here over NVIDIA is crazy.
I mean, it's cheap. It's going to be a question of either you're right or the market's right, because the market has pretty much said they don't want a piece of NVIDIA. Every rally,
Yeah, which is fine. But what happens when Jensen comes out in Q1 and blows earnings out again? I mean, this story can only happen so many times where they blow out earnings and it goes down. Eventually, hedge funds are going to come in and say enough's enough. At some point, big money is going to come in and say enough's enough.
Yeah. Yeah.
And that may not be Q1, but it could be Q2, because guess what happens on their Q2 earnings? Microsoft already reported their fiscal year 25 and gave guidance on 26.
Yeah, so we'll find out after Microsoft's earnings. That's a fact. We'll get a better...
Microsoft's going to be the telltale because they are not going to be able to keep a lid on their CapEx spend. And Amazon will be halfway through a $104 billion cycle. There's another 2 quarters under their belt. Microsoft's going to come out and have to say something. And with Blackwell Ultra and everything coming out, I just can't see how they're not going to continue to grow the way the analysts think they're going to grow.
Yeah. All right. By the way, you seen egg prices?
It's funny how nobody wants to talk about that.
They're coming down. They're coming down. We're getting some of these prices to come down. It makes sense. CPI and PPI was down as well. So if we really can get inflation down, Jay Powell is going to give us that cut.
Oil's down, what, 7% month over month or something like that? 19% year over year?
Yeah, this is a big one. If we can keep oil down and keep growth at least above 1.5 on GDP, that wouldn't be the worst thing in the world.
If you get oil to 55 and just have it stay at the 55 to 60 range, everybody makes money. Oil producers make money. Margins expand for manufacturing companies. Like, that's the sweet spot. You don't need oil to go under 55. You just want it to stay 55 to 60. Then you have very fair pricing. Everybody does well.
How much are you currently paying for gas right now?
I don't know.
Like, is it above 3 still?
Yeah.
Because in Jersey it's at 270 and it's coming down aggressively in a lot of places. So
yeah, I mean, I think it depends because where I am is going to be a little higher, but if you go out in Nassau, it's cheaper. But I would say it's probably $3.25 for regular and $4.10 or $4.19 for premium.
Yeah. Here we got 238 in Oklahoma, 270 Minneapolis, 250 Florida. Like, it is coming down. All right. Well, good stuff. I think that was the big thing for this week, right? Like, it was GTC and Jay Powell. And hope.
Yeah, I mean, he wants to see inflation come down more before he cuts.
Yeah, I mean, the rest of the week doesn't really have a catalyst anymore, as long as we don't get tariff stuff by Trump.
Well, and it's interesting that he phrased it that way, because he basically put the ball in legislators' court at this point. Because he flat out said what needs to happen. And how do we get inflation down? You bring oil down.
Yeah, that's true. It's true. I mean, we're about to pay $1 trillion in interest payments, so we really do need these rates to come down.
I don't know why people don't want the rates to come down. You need to refinance that.
Yeah. All right, cool stuff. There's Steve's Twitter right there in the chat. You can check out his latest Seeking Alpha article on Qualcomm. He'll probably be back on the show on Friday. And yeah.
Yeah, and I think I got one coming out soon on your favorite company, Cisco.
Dude, when are you doing a Palantir article? That's what we really are waiting for.
Yeah, I should do that tonight or tomorrow.
Like, you can say all the same stuff you've been saying and just put it in an article.
I know, I need to get around to it. Maybe I'll do it for you. Doing Palantir Weekly on Friday?
I think, yeah, I believe we are.
Maybe I'll try to get out for Friday and come on.
Yeah.
I don't know. This week or next week. But yeah, I do need to get that done sooner than later.
All right. Well, enjoy your advanced vocabulary of words like thermostat. And
I mean, it's not advanced, it's a common item.
No, but I genuinely could not figure out for the life of me what was an electric heat dialer thing called until I saw the word. So I think you should be grateful that immediately you thought of the word, because not many people can.
I would disagree with that.
Or maybe many people can, but some people can't. And today,
Well, obviously, you proved that some people can.
bro, when I saw the word thermostat, I was like, damn it, that makes sense. It's a thermostat. But in the moment, I'm like trying to express it. I'm like, what do you call this thing? Like, what is it? But it's a thermostat. So there you go. All right, Steve, appreciate you. We'll talk to you later.
All right,
Later. All right, cool. That is it for me. This was an extended, 3 hours market open or market close from Jay Powell talking. In literally an hour, maybe an hour and a half, but probably in an hour, the Archer, Wendy's, and Databricks interview will be posted. So that'll all three of those interviews will be in one. And I know people really want to see the Archer one. That'll be the first one. They're about 15 minutes for each interview. And you'll get to see them talk in depth about how they're using Palantir. Wait till Amit finds out about the thermometers. Okay, so I actually know about this because I was sick and I used the thermometer. But you know those like thermometer guns? There's not a specific word for those, right? Like the ones where you just put it at your forehead and then they show you your temperature. That's just called a okay, Home Depot says a digital thermometer. But yeah, I use those. Thank goodness there's not a specific word for that, dude. Yeah, these things. Oh, temperature gun. Well, anyway, I know what a thermometer is because I've been sick, so I was able to use that. It's called a temperature checker. Oh my gosh. All right, that's it for today. I'll be back tomorrow morning. Again, we'll have the interviews come out in a little bit. And yeah, that's it. We got through FOMC. We got through Jay Powell. Looks like we're going to be okay, at least from that perspective. April 2nd is going to be the most important on where this volatility ends up with tariffs. But even with Jay Powell saying tariff inflation could be transitory, the majority of his talk today was definitely dovish. And markets reflected that, at least for today. We'll see if that happens tomorrow. Trump did not make any announcements. He was not speaking after hours today. He is speaking at the Digital Assets Summit tomorrow in New York. I don't know if that was the announcement around crypto, but I didn't see any major crypto announcement, even though Bitcoin is pumping. So maybe people are expecting that it's going to be coming soon. But as of now, do not see any actual crypto announcements. All right, cool. Thank you, everybody. Appreciate you all. I'll see you guys tomorrow on the market open, and those interviews will be out in about an hour. Bye, everybody. Have a good one.